speakers comes inside to the hall, we are going to the next section of the second day of our annual conference. Welcome back to the day 2 of our annual conference. नए सुबह Sorry for some little interruption between. Good morning once again. Naya Subak, Naya Avasar, new morning, new opportunities. It's my great honor and pleasure to welcome you all the second day of highly anticipated conference. May I request our AV team to play the video of yesterday's highlights. That was a wonderful presentation. The energy and the insight from yesterday's were truly inspiring. And we are excited to continue the building on that momentum today. With more thought-provoking sessions ahead, I am confident that day 2 will be just as impactful and enriching. Let us dive in. As yesterday, our secretary said for early bird raffle draw. Can I request the team to bring that fish bowl? If anyone missed to put the raffle coupon, please use this is last opportunity. You can get a Lulu voucher worth of 200 real. Sorry, 400 real. That means money is back. Anyone? Commas excluded, okay? Clear? May I request our past chairperson, George Thomas, come to the stage and pick the first raffle draw winner. The first winner is, can you guess which number? It's a 48 number. Not our membership number, it's 6 digit, okay? Starting with 5, 8, 0. It's like a Dubai jackpot. Tell me, last. 4. Who is the lucky? Wow. Instead of Dubai, that price grabbed to Bahrain. Anyway, congratulations to Bahrain past chairperson Stanamurthy for the lucky winner. I think that his star is shining like every day. One more announcement. After every session, we have raffle draw is there. Especially, again, after the vote of thanks, we have mega raffle draw with 2 Lulu gift vouchers also, plus 1 Huawei tab mate also there. I don't know who will take that to the home for the day. So we have to wait up to the last session. You will get a lot of prizes, okay? Now, I would like to invite CA Arun Somadat come to the stage to take over the next session. Next session, we have to honor our neighboring friends. Overseas chapter felicitation is going on.
Good morning, members. GCC bonding has always been a great strength to each and everyone, those who works in the XCOM. And to show this strength, we have representative from each and every chapter today here. I would like to invite our chapter chairperson CA Kamlesh and vice chairperson CA Kishore to please come onto the stage. CA Kishore. we would like to felicitate our representatives from GCC chapters with the memento as a token of appreciation and love. They have been always very helpful wherever you go, whenever you go to their chapters as well. The way they host us is truly amazing. I would like to first call upon CA Krishnan to please accept a small token of appreciation from Doha chapter of ICAI. He is from Abu Dhabi chapter. He is the chairperson of Abu Dhabi chapter.
Thank you, Kamlesh and team, for inviting us. The overseas chapter invite is not only for the ExCom members of the other chapters. We look forward to each and every member of GCC chapter to come to the events of the other chapter. We always welcome. This is where we have great bonding. So not only with the ExCom, we look forward to welcome you all whenever there is a conference is happening in other overseas chapter. Thank you.
So he wanted to add on to the ExCom word which I used. Thank you. Now I request CA Chandra and the team from Al Khobar to please accept a small token of appreciation from our chapter. I'm going alphabetic order. Now I request Chairperson of Bahrain Chapter CA Vivek and his team to please come onto the stage to accept the token of appreciation from Doha Chapter.
Good morning, everyone. So our chairperson of Abu Dhabi chapter has already mentioned that we are delighted by coming here, and we are looking forward to welcoming you to Bahrain chapter of ICAI as well. Our annual conference is on 29th and 30th of November. So whoever can, please join. We'll be really happy to host you. Thank you.
Since the roads have also opened now, we have representation from Bahrain chapter in large number. In fact, more members will be joining in today. Now I request Dubai chairperson and vice chairperson, CA Rajesh Somani and CA Jaiprakash Agarwal to please come onto the stage.
Very good morning to all of you, and thank you, Kamlesh and team, for inviting us and to participate in this very energetic and the relevant topic of the Persian economy. We have organized our annual conference on 14th and 15th December in Dubai. Request all the chapters and whomsoever is in Dubai or can come, please participate in that. While all the members from the different chapters are here, I have one request to all of you. Our CA program has still not been recognized in the Gulf by any local government. My request to all of you, please work in this direction in your respective country and get the CA degree recognized as a postgraduate or the master degree, because India government has already issued university that CA is equivalent to the postgraduate degree. Your all efforts and any lead in any particular chapter will help in other part of the GCC to get it done.
Now I request CA Aditya and the Kuwait chapter teams to please come onto the stage. We have the current chairperson and the past chairperson and the current ExCom here. Two past chairs, in fact.
Hello everyone, I'm C. Aditya Dhanuka. We have our conference on the 7th of December and you all are invited. We'll be happy to host you guys. The warmth from Doha chapter has been great. It's my second year and the bond is just going better year on year. So I believe people who sometimes ask, why to waste, guys, you're missing out on a bigger fun. Do step up. Committee does a lot of hard work and I request all of you to step up who has not stepped up so far. Thank you.
Last but not the least, the first chapter to going to host the GCC summit. I request the Oman team, CA Gaurav and past chairperson and the team, the entire team to
Good morning, everyone. I'll just say that which your Doha chapter chairperson, CA Kamlesh, said yesterday that the first ICAI GCC seminar is happening this year. When I say this year, it's 24-25. And I'm proud to say that with the support of all the GCC chairpersons, we all agreed that it will take place in Muscat, Oman. So please do visit, not only for the conference, but it's a beautiful city. And it's on 18th of January, which is a Saturday. And because we are in GCC, where in some parts it's Friday and Saturday weekend, and in some parts it's Saturday and Sunday weekend, so we had to place it on a Saturday. But I'm sure who have Friday, Saturday weekend will come a day earlier, and the others will come a day after as well. So we'll have some activity on a day before as well as day after. So please plan for the full weekend and not only on Saturday. In addition as well, all the paid members of Doha chapter will be having free registration for the seminar. Thank you, everyone. Look forward to seeing you in January.
That was a surprise, new addition to the list. Now I request C. Ashwati to take over the proceedings.
Good morning, ladies and gentlemen. It's a pleasure to meet you all again on this beautiful morning. Aim of becoming successful. One of the most crucial aspects of that journey is building a well-balanced portfolio. We have our next speaker, CA Ashish, for fair strategies specifically designed for small investors looking to make smart and sustainable choice. Before we dive into his insights, let's first take a look at his impressive background. We team to play the video.
Tech and growth portfolios at Bloom Ventures, supporting the growth and success of notable portfolio companies such as Slice, Purple, Turtlemint, Jai Kisan, and Stellapps. He also spearheads fundraising in Trinity and continuity funds across Middle Asia and India. An early member of Bloom leadership, Ashish joined Sanjay and Karthik at Bloom in 2000 and been pivotal in mentoring and structuring Bloom's platform team. He significantly contributed to the inception and expansion action and financial advisory firm seeded by Bloom. A recognized thought leader, Ashish's insights are captured in Bloom's Future of Money report and FinTech thesis. He actively contributes to industry dialogues through platforms like IVCA and PEVC CFO Association, showcasing his extensive involvement in the venture capital ecosystem. A chartered accountant and company secretary by qualification, he has also been a visiting faculty and speaker at industry associations and premier business schools. In the decade prior to joining Bloom in its formative years, Ashish was a part of Times Group, Standard Chartered Bank, and State Bank of India.
Wow, that's a truly inspiring journey of a chartered accountant who has taken the road less traveled. Now, without further ado, with a round of loud applause, please join me in welcoming CA Ashish Fafadia to the stage.
Thank you. Thank you. Hi, good morning, everyone. My reputation has preceded me. Hi, good morning, everyone. That was better. Thank you very much. What I thought is that over the next about 35-40 minutes before we get into Q&A, I will try and share some of our learnings as we built out Bloom. I'll start with a very quick 60-second context. I'll take back everyone to 2011. I hope everybody can hear me clearly without the echo, because on the stage I get a little bit of an echo. I hope it's good. Okay, so we started off in 2011, and when we used to discuss through 2010-11, we observed that the ecosystem on the tech side, on the startup side, was largely concentrated around angel associations who were trying to bring in companies into Bombay, discuss ideas on a Saturday morning once in a while, and some of them would end up getting funding. And I'm not exaggerating. While I'm talking about 2011, 2010, or even 2008, which is not so far ago, the investment that some of these startups got from various angels would be as low as, guess what? Anybody? It has been as low as 50,000 also. So it was a small room in Chopati where I got my first exposure in 2008 when I joined Karthik as a representative of the Times Group. And it was a tiny room at Chopati in Bombay. Those of you who are from Bombay would know what I'm talking about. About 20 odd people sitting in the room, 4 startups pitched back to back. And then people have to come back and say, I like this. I'm in with 1 lakh, 5 lakh. 5 lakh was a big number. And by the turn of 2010-11, we realized the fact that there was a valley of death. So what I mean by the valley of death and what we were trying to solve for was basically going to count my learnings, which some of us can benefit from, is what my thought is. Wherever possible, please feel free to ask questions, stop me. I don't intend to make it a monologue, but the idea is to actually try and share some of these learnings for sharing as to how we have seen investments panning out in India, the journey that we have witnessed, and that's about it. While the incentives as well as the constraints in which venture capital funds like us operate versus people who are angel investing, they can differ. So I will try and make sure that I empathize with those and bring out those highlights from time to time. And I'll keep making sure that there is a reconciliation of sorts between the two so that people have the balanced perspective. So in terms of how would VCs typically work, the investors in the ecosystem constitute HNIs like yourselves. There are pension funds. All of them put together invest into forming a venture capital fund. So a startup can typically decide whether they want to receive money from a venture capital fund or they want to receive money from angels like yourselves. And people have all the options. It is logical that a good startup is going to go for a venture capital fund because a fund gives a better start to the journey. And then there are enough angel investors who are called super angels. Super angels are people who have a relevant experience, who come in with value beyond their capital, and they are going to support the company in the journey for much more than what their capital brings in the table. I'm not going to cover 30, 40 slides. I'm going to focus on 6, 7 slides which are most relevant. So first and foremost, VC, like we typically always caution people, is the riskiest of the asset class. Not as risky as gambling in casinos. Enough people also say that matka laga to bada gain mil jayega, which is not true. Power law plays out. I will definitely talk about it over the next 35, 40 minutes on how the power law plays out, how we have been beneficiaries of that. But at the same time, it is not matka. And it is less risky than that and much more intellectually simulating than that. So in terms of the asset classes, I would count that as the riskiest one. And moving into typically how we have seen success stories come out of it, you have enough people now. Back then, when we started off Bloom, we were pretty much the first micro VC. VC ke niche, there is micro VC. VC is basically investing institutional money by giving people 20, 30 crores back then. India didn't have enough venture capital firms. We were pretty much the first homegrown firm that raised 100 crores from India. And I'm not exaggerating. We went and pitched 600 people in South Bombay, South Delhi, Bangalore. And that's when we managed to pull off 100 crores. And we missed the target by 1 crore. We managed it 99. It was then. And today when we look at things, I can safely tell you that the same people who we were struggling to convince to put 1 crore are today happily putting in 3, 4, 5 crores in a single company directly, which is even riskier than putting money into a fund. So that's how fast the ecosystem has changed. That's how the landscape and the opportunity has changed. And since I have fellow CAs here, I would like to say that this is actually a leveler in the sense that when we started studying back in the last millennium, some of us studied back in the 90s like myself. So that time we were studying very different framework of accounting standards, auditing standards, tax regulations. I do feel constrained at times that most of what we learned at that point in time is probably not as relevant. I am in the midst of my fellow members and I might not want to be politically incorrect, but I would have said at some other forum that it's totally irrelevant. It's that much fundamental change that we have gone through, whether it is about how revenue is recognized, presented, accounted, diligenced, significant changes. So I referred to the word power law a few minutes ago. And that is a key to success for everybody who is keen to evaluate investing in the VC space. What I've taken is an example, and I will tell you actual names on how this has played out. With full disclosure, this is public data. We typically publish it every year, and we are happy for you to share it with your members also. We don't have any issues. So power law is a concept where you invest in a few companies, you build a portfolio. Some of you will, let's say, create a portfolio of $1 million. I'm using dollar as a unifying currency across members given the international audience here. So let's say people build a portfolio of $1 million, and you would ideally think that I should have about 20 to 30 companies. That's what most of us would create if it was a listed company, right? So when you are looking at a listed company portfolio, you will say that, okay, my portfolio is generating 14%, 18%, or 10, or whatever. Each of the companies have to be in a ballpark. You will not have any company that is a complete write-off. And you will not have a company which has gone into a crazy territory generating 100% return. But in VC, that's exactly what happens. The best performing portfolios, whether it is an angel investor like you all, whether it is us as venture capitalists, in the best performing portfolio, it's proven research in the US that the top funds, the top quartile funds, are those where 6 companies generate greater than 90% of the return. So if it's a $100 million fund, you generate, let's say, $400 million. That 400 may say 360 would be generated by 6 companies. And the quantum that would have gone into those companies would not be 60%. It will be a far cry from that 60%. So the whole art is in trying to create a portfolio which will try and get you the maximum leverage on the power law. And that's where I would humbly submit that no matter how smart we can pretend, no matter how astute we can behave, it is also a function of lot of serendipity. And I will talk about few of our case studies and examples over the next 10 minutes as I deliberate into the power law. Because this is the fundamental of the venture portfolio creation, which I think everybody should bear in mind. So this is trying to just put that example in place. It's a very simplistic example where we have just assumed, you can assume a fraction of that amount, nothing changes. I've taken a fund example here at $100 million. You can take it as a $1 million angel portfolio. So here we have simply said all the money got equally divided between these 25 companies, and this is how it played out. In the end state, one company delivered a mega large outcome. And there were very, very serious amount of failures. So you will observe that more than half the companies failed. In our fund 1, it's not at all something that people may find easy to resonate, but 50% of the companies went down to 0. And because we had taken money from angel investors like yourselves, enough people would call up and say, gaya wo to theek hai, aapka return overall ठीक ठाक लग रहा है, but ये जो गए उसमें से कुछ निकालने की कोशिश तो करो तो रिटर्न और बढ़ेगा. क्या निकालने का बोल रहे थे वो लोग? बोले कंप्यूटर, टेबल, कुर्सी कुछ होगा. ऐसा नहीं होता है. There is no residual value in a startup. IP is a big thing. We do tend to overplay that, but fact of the matter is that if a company delivers an exit, the best exit is only by way of an IPO. So in the fund 1, we did take some of the investment decisions where we felt that niche sector hai, M&A ho jayega. Because the founders were making pitches like, I'm coming and going to disrupt LinkedIn. So LinkedIn will have to acquire me, as an example. ऐसा नहीं होता है. Before we do a good job of making something which is worthy of disrupting LinkedIn, LinkedIn will catch up. They are there because they are worthy enough to be there. So those are seemingly very, very basic, very, very obvious, but in a pitch of a very inspiring founder, one can get carried away. Because the journey in a venture capital investment is all about the founder. When you're making the investment, what do you have? You just have the story and the vision of the founder to decide. Financials to kuch hote nahi hai. And that is the reason I have found that in most of our investors who have not made an investment, there was a common pattern in the fund one. Either there was somebody in the room who had a very strong understanding on financials, or they were consulting somebody at our back who had a very deep understanding on financials. Because we were trying to say that we will come in early, we will go and back an idea, it's all about the founder. If the founder is good, he will create something out of a bad idea, will emerge, will pivot, will evolve. And people would say, examples dikhaiye, examples dekhenge, track record dikhega, but financials nahi dikhte. And people would say, nahi, maza nahi aaya, chhod dete. So that's very crucial. It's all about the founder. It's all about the power law. It's all about the market dynamics. A above average founder in an outstanding market is the best combination to generate an alpha versus an outstanding founder in an average market. An outstanding founder in an average market, when you make an investment, I promise you, it is not something that will make you great outcomes. This is translating the power law into actual, with actual names. Every name here is our Fund 1 portfolio. This is what the portfolio looked like. The cover here in light blue that we have put out there is basically expanding to the power law. That's how it performed. So you can see that as a fraction of the investment of the total. The reason it goes to 114 crore is because we got early exits, reinvested that back. That's all. And look at the end state. All these companies that you are seeing here gave practically next to nothing. A few of them gave a little bit of a capital back in this part, but otherwise most of them was zero. What got us to our success is this. In, for example, Grey Orange, which was our biggest success, Carbon Clean biggest success, out of the 99 crore investments, which finally we did 114, we invested 1 crore. And that got us the end state 78 crores. And we have another 17 which is left, which we have not exited because we feel it will still do better. We have found a way to shut the fund down and still hold it. When it materializes, investors will get the money. So this is real. Ye hota hai. But for that to get a chance, the 3 rules that I said, focus on getting the power law right, focus on the founder and the market size. It is important to triangulate between these 3. When you get these 3 right, ek dimension aur aayega, and that is this sector fundable? Lot of people in 2017 to 19 went very deeply after crypto. And I had my severe reservations on crypto, which I have published it openly also. This is not the session to talk about it, so I'll not bother. But we used to get asked this question, ke crypto mein kyun invest nahi kar rahe ho? That's the hot thing. And 1 in every 5 pitches given I cover fintech used to be about DeFi plays. And it was getting a little mind-numbing. But the fundamental concern was that I was not sure how the Indian government is going to react. So if the sector is not fundable, great founder, good market, momentum underneath doesn't get anywhere. Sometimes fundability is not about government and the sector. Sometimes fundability is about the presentability of the founder. Because when we are investing in startups, people feel that apna conviction, go with it. That's what we have always practiced. There are enough contra investments that we have made in this bucket which have been successful. For example, when we were doing Purple, for 8 years running, the constant feedback that we got, Purple is a beauty and cosmetics business. Guess what is the feedback we got? Our money is invested, but that is not good enough to grow. IPO nahi aayega 10 saal mein. Somebody else has to also invest. So we are going and taking it to everybody else also, to other VCs much bigger than us, and say that please come. The common feedback we got is, all these boys, how are they going to solve a women-centric problem? And today that has become the biggest success driver in the portfolio. Had we not exited Purple, we exited and made 42 crores, 1 crore. Had we not exited, today it would have been 176. We exited just 3 years ago. After all the pain was done, we exited. Withstanding that pain, we still made a 44x. But had we taken the liberties of holding longer, we would have got little more. So that's the importance of getting all of these equations right, what I said. Future fundability bhi koi cheez hai, wo matter karta hai. So we have discussed 4 points. We have discussed the power law. We have discussed that founder is the key to the decision. We have discussed that market size is a big factor. And finally, how fundable the sector is going to be. Yes, sir, somebody raised. This has taken 12 years. And I have to give credit. Fund managers like us keep saying institution से पैसा raise करना चाहिए क्योंकि angels के से बहुत painful हो जाता है. But I have to acknowledge that not one of our investors called up and said पैसा वापस लाओ. They would read the reports, they will give us comments, they will ask gentle questions like लग रहा है ना ये जितना तुम report में दिखा रहे हो cash में convert कर पाओगे. So, but yeah, it has taken 12 years. And it is after that, what happened the next 2 years is what has given the big multipliers, even bigger, right? So that's the quick answer to your question. So these are the major exit routes. After you have built the portfolio, you have a shot at exiting to incoming investors in the next round. And this is what we always try and tell people in an angel group like this, that if you have created a portfolio of 20, 30 companies, mauka milega when the company is doing well, try and sell something. This is a mistake that we made 2 years ago. In 2021, and this is what I found telling myself to a big institution that I pitched just 3 days ago. They said, what is one thing that you should have done differently? And I said, we were being very conservative, very prudent. जब भी कोई company का valuation बहुत ज़्यादा inflate हो जाता है, we never marked up the company, just to showcase to the investors that इतना ही मिलेगा. Positive surprises are welcome. The CA in me took over. Investment you are doing with lot of optimism, lot of hope. But when it comes to reporting, my CA brain took over and I said, काम करेंगे. He said, तो that is good. I said, मगर जब चक्कर आ रहा है ये सोच के कि this is overvalued, I want to provision it deeply, तो थोड़ा बेचना चाहिए था ना. When you are perplexed about the pricing, you should have sold some and got out. So please, time to time, whenever the portfolio is appreciating, founders go around asking angel investors just don't sell. And they say that, pakad ke rakhenge. They give this thing, once in a while we have some people who have grown with us. They say that founder nikalna chahta hai. My point is no. Thoda le lo. Get your capital out. Get your portfolio out. Because these trends change every decade. There will be new opportunities to come. M&As is a ridiculous expectation. M&As hote hain to hote hain, varna nahi hote. These are accidents. In India, there are only 3 big M&As that have happened. Indian corporates are not keen to acquire if that is your market to invest. If you're investing in US markets, you have access to those, please do. No problem. But India mein M&As nahi hote. Indian corporates still have somebody in the room who will ask question that आपने कितना खर्चा किया ये बनाने में? अच्छा मैंने तो 300 करोड़ रुपया खर्चा किया, फिर भी आप प्रॉफिटेबल नहीं है. He will tell the CEO ये इससे 1/3 में मैं बना दूंगा. टाइम वैल्यू ऑफ मनी का कदर नहीं है. So don't bank on M&A का story, it's mythical. And IPO is ultimate. This is not something which I will want to spend too much of time on. This is some of our reports which we have just put in. This is something which is very important. In the Nifty 50, you see that 21 years is what it has taken for an average Nifty 50 company to go and list. And when you take a look at VC-backed company, 14 years. This is what I said about 15 minutes ago, that our money is not enough. Your money is also not going to be enough. The founder has to go and raise money 4 times, 5 times, at least. So that is the difference. Why ye 21 ke badle 14 mein hota hai. These 21 companies that went and listed didn't get money in the way that today's founders are getting. Pehle nahi hota tha. So that is what you are paying for. That is the premium. And when you look at some of these companies, you will even see that they are even faster. Great. This is the case as to some people get perplexed as to itna zyada momentum, and look at this. This is a telling blow. This is what some of us who finished and landed in the market pre-Y2K were paying. And you know your build rates in India. This is what is driving the entire surge in the VC activity. So this is our classification of the market basically. I'm guessing everybody will look at India. So we basically said this, you invest in this market, which is the consuming class. The reason this region has done very well in some startup activity because of the fact that most of the people are here in this region. They can spend, they can consume, they can pay. So either startups profitable banna easy hai, scalable banna mushkil hai. So in terms of some of these factors, as to given we have another about 10 minutes, right? So your founders, when you're talking to founders and evaluating them for an investment, these are people who are not motivated by money. Them not being motivated by money is good and bad both. We were recently talking to an event at IIM Bangalore, and one of the professor who taught venture in IIMB asked the question in the first row. He said, you're saying that founder should not be motivated by money. What if the guy comes and says, I have created great impact, but I did not make money? You are accepting that as an outcome. And my point was, मेरा end state 5x expectation है, तब जाके मैं investor को 4.5x दे पाऊंगा. So it's hygiene, no boss. That I have to. I'm participating in the most capitalistic society that can ever be. This is as American as it can get. So if I'm busy, you're taking money from a venture investor, that savviness and the founder has to be there, that I have to get an exit. But he can't be driven saying that this is the only way I can make 500 crores or 1,000 crores for myself. That's what we are trying to say. That he has to, if this is what it is, you will get the scams that you have seen. We have seen half a dozen startups which have scaled up phenomenally well. And that is not what we are trying to say we should go after. All that we are trying to say is that they were just trying to scale up incessantly. And even at a high base, how can you grow 100% year on year? That's what we are trying to say, that he will have to not be worried about day-to-day money. Can he postpone gratification? That's the key question. Many a times in the first 5 years, we raised the second fund few years later, that was 375 crores. Even 3 years ago, when we are investing from our 2,000 crore fund, we had somebody come in and say, my last salary was 1.5 crore. That I have to get some way to come closer to that. Doesn't work. A founder cannot have the mindset of instant gratification. He has to be willing. That's a key thing. But at the same time, please do remember the other extreme nahi ja sakte. He will have to take something. Sustenance naam ka bhi koi cheez hai. Then there is a very high degree of team building and bonding. So if a single founder comes and you are making an investment, please tell yourself good reasons why you're still investing. We have done that, very few cases, and our proudest outcome are not our biggest outcome. We had a company called E2E Networks. Some of you may have tracked it on the listed markets. We invested 28 lakhs. It was at a valuation of 3-4 crores. It got listed on the SME exchange at 60 crore. People frowned at us and said, SME mein kya chalta hai, tumko malum hai? India mein. We said, we know. Our founder will not get into all that muck. He listed at 60 crore market cap. Today it is 3,800 crore. Part of it is on the back of AI and all that. But even otherwise, 2,500 crore, 30,000 crore to kahin nahi gaya. That is what we are proud of. We are not going after just making sure that 20,000 crore ka hona chahiye. Isme se bhi we got good outcome for our investors, and that is what we are happy. Single founder. But that is an exception. So when you're going after, just make sure that there is a chemistry with 2 or 3 founders, because that is your proxy diligence. जो आदमी 1-2 लोग को convince नहीं कर सकता, आगे चल के और दूसरे 100 को कैसे convince करेगा? और वो अगर बोल रहा है कि no, I am single founder, I want to be that way, it's a question that begs answering. So that's where I am trying to impress upon. There has to be some, that's about Bloom. We need some sense of purpose. Enough investors don't care about it. It's about up to you all. And when I'm telling this in an angels event, I typically say that if you have any allocation for charity, good cause in your portfolio, go after these kind of investments out of that allocation. Jo bana, you can do whatever charity you want in the end state. But do it before you invest. Bada ban gaya, uske baad decide mat karna ki isme abhi nahi dalenge. So that's briefly what, these are the 5-6 learnings that I thought I'll cover. Some bit of toppings for what it's worth. In the interest of building empathy for the founder on the other side, a founder goes through a massive amount of uncertainty, there is ambiguity, and finally, that's what creates the entrepreneurial gut. And that's true for you all as an angel investor as well. You are dealing with a massive amount of uncertainty. I'm going after investments into drones. In Ganpati, there is a board, Visarjan ke time pe. Drones are not allowed. There is a view on where drones can be used and where it cannot be used. So you are dealing with uncertainty. Or you are investing into AI, and only one of the few things common in both the US incumbent presidents who are fighting election is their view on AI. They do feel that tech has to be controlled. Otherwise it can wreak a havoc on mankind. So yes, there's ambiguity. That is why I said it's the riskiest class for a variety of reasons. So when you are acting as an angel, you are basically making a decision. That's your entrepreneurial side kick. You have to be mindful of that. The other aspect of this whole thing is company mein thoda sa you have to keep this whole ability to go deeper. People say that 1 lakh, 5 lakh, 10 lakh dalenge and we will wait for it. Aisa nahi hota hai. You will have to keep reserves. The last bit on the toppings is that people do feel that I will crack it on the back of other people doing it. Aisa nahi hota hai. We have seen companies where there are 200 investors after the Indian company law allowed the maximum number of investors to be increased from 50 to 200. Those have also failed. And in that cap table, shareholding list, who's who were there? And that is also failed. So just because more number of people are going, it doesn't make it a success. But yes, if you are trying to construct it smartly and sensibly, it definitely makes a big difference. This is what I have broadly covered. We spoke about it earlier. I mentioned this. You can make 100x, 500x, all of that. But those are rarest of the rare cases. In 70 plus companies in Fund 1, when I'm talking about the power law, 6 of those 71 which were big outcomes, and there were another 13, 14, which means the value of capital that got the outcome is going to be far and few. So, 1, 2, 5 karke ruk mat jana. You will have to commit yourself. Or 25 ek saal mein nahi karna hai. You will have to give it attention. This activity needs 3 to 5x the time and attention that your listed portfolio needs. This is assuming the fact that you just track the price and move on. But if you're doing a good job of a listed company, yes, maybe same like that. That's what I'm trying to talk about. So the fundamental checklist is, now that I have said all the good things, let me tell a few cautionary tales. Are you venture mein? The biggest factor on the back of which you are going to make this successful is on the back of best deal flow. Just because we have raised $650 million, somebody could have raised 5x that amount, it doesn't mean we can rest and assume that founders आएंगे, हम पैसा देंगे, वो बड़ा बनेगा. In venture, unlike in debt, unlike in conventional business, it is not us who are deciding to give money to the founder. I say this with equal pride and humility that the founder decides who he has to take money from. So what am I saying? The best deal flow. A founder ka best thought process, best founder will say, I will go to the best venture capital fund. The reason he wants to go to the best venture capital fund is because of 2 factors. One, he believes that the venture capital fund will help him with networks, with opening up of doors, with follow-on round of funding, making sure that there is amplification of the business through that network, all of that. Funds like us bring in our investors to invest into the portfolio as well. And that is not 1, 2s and 3s and 4 crores. The highest that has gone into is more than $150 million. This is our investor who's invested in us, and then we have got it to the founder. So the best founder says, I will first try there. Then I will go to other VCs. Then he says, I will go to certain other super angels, people who are CEOs, CXOs of large corporations who understand. जो मुझे ज़्यादा नहीं तो 3 महीने में 1 घंटे का वक्त देगा, where I will learn some insightful things and come out and implement. Then, last choice, he comes in the market and he's happy to take 20 lakhs, 30 lakhs. Deal flow आपके पास best है क्या? This is what only each of us can answer. And I can say this with sufficient amount of conviction that if you are going to not attract the deal flow, no matter what your portfolio is, your chances go down by less than 10 to 20%. That is the key punch. The second, we have to answer questions like, why are you investing? And if you're not going to review things, if you're not going to meet, if you're not going to network, if you're not going to stay relevant to the investment that you have made. So the why is as important as the what. It's not enough that you are investing. You have to make sure that there is something that you bring that you can make a difference. It's a great pastime, but it's a terrible pastime activity. And finally, it's a long-term game. We haven't seen people flip portfolios in 5 years and make money. Luck factor hai. Whatever I say can be contradicted and proven. But broadly agar we are discussing, it is not possible to make money if you're not doing it for 10, 15, 20 years. I can say this, somebody asked me this question on this trip. I've been out on the road for last 6 days. He said, you must be now rolling into riches. Ye fund 1, 3rd, 4th aa gaya. And I said, barabar hai. Fund 1 ka jo carry aaya, we made 55 crores of carry. We have 3 partners. पूरा फ्यूचर फंड में इन्वेस्टेड है, तब जाके 2,500 करोड़ और बिना, क्योंकि द इन्वेस्टर से अब तो तुम्हारे पास पैसा है, वापस डालो, shows that you believe in your own fund. Skin in the game नाम का भी कोई चीज है. It is a 25-year game. अगर इंस्टीट्यूशन बनाना है तो, अगर same way for angel investor, if you're going to make sure that you're going to get the best deal flow, it's going to come on your brand. If you're going to build the brand, it will take 20 years. Take me for it. So that's briefly what I thought I'll cover. It's warning me that my time is up. I'll shut up and see if we have time for 1 or 2 questions. Yes, sir. Please, sir, please sit.
Thank you, Ashish. You spoke from your heart, and I felt it so.
Thank you very much.
And my question is, nowadays, whenever I go to India, all my young niece and nephews, they have ideas, and they ask for capital. But the problem is they ask the valuation like 20 crores, 30 crores, 50 crores, keval idea basis pe. So I am like a more a PE investor. So I don't know how to sustain that, how to vouch for that value.
Sir, एक simple आपको, you asked valuation, वो दूसरा 40 minute का topic है. So, but I'll tell you this. आप simple बोलो, I'm assuming you will invest maybe 5 to 50 lakhs, something in between. Your simple point is, go and raise, count my support, मेरा 20 लाख मिल जाएगा, आप market से पैसा ले लो, जो valuation आपको मिलेगा मैं आ जाऊँगा. As simple as that. बस 2 ही condition है, somebody has to be bigger than me, who has to put money. Second condition is that you should come and explain to me how much money you need to get to the next round. यहाँ पे treadmill चलता है सर. एक बार आपने किसी angel से पैसा ले लिया, VC से पैसा ले लिया, that means you are embarking on a 20-year journey, which has to end with an IPO. For the investors, not for the founder. उसके लिए तो another whatever, right? So you say that, give me that you have enough resources to get to a critical point where somebody else will see. You ask questions like, who will your next round of investors be? So rather than judging them, you start mentoring them and say, institutional investors के पास जाने का plan क्यों नहीं है? So you start getting into that. And that is what I would, it's a good question and thank you for asking that. I would urge everybody, there is something more that you bring on the value system or financial acumen, or accounting skills. Please start adding that value and mentor the person. If the person is liking you without you getting into 100 minutes of complex gyan, but if he's resonating, put money and see how it plays out. You're not going to put more than 5-10% of your net worth anyway into the entire portfolio. If you're doing more than that, you jolly well got to be an expert or you're going to do this full time. Power to you. But otherwise, it's okay. Dekha jayega.
Excuse me?
Yes.
The funding that you are raising, is it a kind of alternate investment fund? Okay. In that case, I think there's a SEBI regulation that you have to mention the period like 5 years plus 2 years like that. And when the period is over, that 5 years or 2 years, I mean plus 2 years, and if at that point of time you're not able to exit, then how do you then juggle with the, how do you return the funds?
Okay. We showed that chart of 2 balloons where we showed the power law playing out, right? More than 50% of the money we have returned without selling the company. We created another fund. Company ka valuation was established by third parties, not valuer. It's senseless to go and take valuer reports for venture. This is somebody else putting money. So we took that price, transferred that company, gave money to everybody. Those people also came back and said, sensible strategy hai. Government forces you to exit in 10 years because that's a SEBI law. 15 saal lagte hain listing ko. I showed you that it takes time. We'll come back and invest more money. So that's what we did. If it's a good company, great prospects, paisa mil jata hai. जो bottom of the pyramid hai, which are not doing well, we sell it out to the founder at zero cost, let him continue. There are enough that we are going to do that. Because Fund 1 is now coming to an end. SEBI is with a danda after us and saying, Band karo. So we are going to do that. We'll give the shares back to the founder. Investors have got good returns. Everybody is happy. So we will do that. No, its venture is run for 10-12 years, sir. 5-7 में तो कुछ नहीं होता है.
Hi.
Hi. Yeah.
I have a question. Firstly, thank you so much for this insightful session. And we have a similarity of gray orange. Gray orange, you made a money as an investor. We made a money as a consultant there.
Okay.
Yeah. So my question is
enough
regarding,
consultants make more money than investors sometimes.
yeah. So my question is regarding the exit strategy you guys have for IPO. So there are multiple scenarios where we have seen like the fresh work is a great, like I would say, case study, and Zomato and Paytm, and then where is the Baizu? So apart from the valuation, which all factors you as a VC see into the like that particular business, that this is a great point of exit post IPO as well? Like a recent case is Ola also, if you see. So what all other factors apart from valuation which you see? Like Hyundai is also a high valuation.
If you're running a fund, I have a finite timeline in which I have to exit. Period. I have to exit within 10 to 12 years. If I've got my returns, if what I see as a valuation is okay, if my time is up or coming to an end, I'll exit. Now there are some other considerations. I'm looking at my rest of the portfolio and I observe that इसमें कुछ दम नहीं लग रहा है. मेरे पास और 2 साल है fund बंद करने के लिए. I'll hold. Because this company will do well. Instead of doing 2.5x return, I'll deliver 5x return if this company compounds well. So it's dynamics of these three. How much time you have left? How is the valuation there? And is the founder of that company giving you the comfort? Do you have access? As an angel, you may not have access to the founder after the first 1.5 years. When you enter, he's taking money from you, all good stories. But after that, if he's spending time telling you about the company, that means he's wasting his time.
But where is the like Freshworks? It was listed at with a great valuation, but then it shrinks into down.
Up down hota rehta hai boss. If you're investing with a vision of 10 years, all of those are part and parcel of the game. So, like I told you 10 minutes ago, no, if you are feeling unconvinced about what valuation it is, go and sell. Best. Move on.
Due to time constraints, we'll take the questions offline, please.
Yeah, one last question, if I may.
Okay, just...
If you can go to that slide where you showed that circle, right?
The power law?
Yeah, the power.
Go ahead with your question.
Yeah. So you have we see a lot of companies here in both these charts, right? So how do you ensure that the funds raised or funds invested are utilized for the purpose for which it is raised? For example, we all know what's similarly, how do you ensure what checks and balances, how do you monitor that the funds are used for the same purposes for which it's been raised?
Okay, thanks for asking that question. I will take just 1.5 to 2 minutes if you don't mind. Without asking paise ka kya hua, we do a 2.5 to 3x job of that hisab. When you go a board meeting and say, batao hisab, I promise you, you will hear what you want to hear. But we have an active platform team. We have a person full-time whose job in the firm is to help the company with business. So my first feedback is not numbers theek hai ki nahi, uska sales pitch theek hai ki nahi. Sales pitch theek hoga to clients milega to revenue aayega. So I'm using that person. He's actually going and genuinely helping the founder. He got covered in the top 85 people in the world who do this for portfolio companies. So all great, but it's my intelligence gathering mechanism also. I have one person full-time supporting young companies to raise money from outside investors. So when I socialize that company with 20 other fellow VCs, case mein aur paise dalo at a better valuation, I start getting feedback. Then I have somebody at growth stage. Then I have somebody for debt. Then I have somebody for community learning. ये चारों fail होते हैं ना, वहाँ पे वो community वाली जो lady है ना, she comes in and says, he's doing all the right things, but his value systems don't give a good feeling. Was alert कर हो जाता है. क्योंकि in the group of 20 people, what he says, what she says becomes useful. So we have not set up these to get all this. I'm being very candid to you. But these become genuine mechanisms for the best founders to come and say that, yeah, this यहाँ पे तो मेरा बहुत amplification हो रहा है. And then, of course, I'm not waiting for the 3-monthly board meeting. Sorry. While I was here this morning, I have already spoken to 4 of my founders and basically gone down the path of understanding a few things. Each of those interactions between the board meeting will be for a deep topic. He's asking, I'm actually now starting to give secured loan. Unsecured loan ka business hai, secured loan karna chahta hai, 4 crore. Book size hi 40 hai, and he's going to put 10% into one. I'm saying, boss, nahi ho sakta. So if you make yourself available to the founder, बहुत problem सुलझ जाता है. If you tell the founder what to do, rest assured problems magnify होता है. Invest in a founder who you don't have to tell what to do, and yet he feels most comfortable to ask you that this is what I'm doing right or wrong. That's the mantra.
Thank you, thank you. Thank you, CA Ashish. That was an informative session and also an engaging question and answer session. So I'm sure all of us definitely have a lot to think about and apply in our journeys from this session. So may I now request our past chairperson, CA Ravishankar, along with our chairperson, CA Kamlesh, and vice chairperson, CA Kishore, to join us on stage and present a memento to the speaker. Now we will move on to a brief felicitation session. One of the most important steps in setting the tone for our conference was finding a perfect tagline. We invited suggestions from our dear members. Thank you to everyone who have participated and contributed their creativity. After careful consideration, we have selected a tagline that truly captures the spirit of our event. Startup Search, Igniting Innovation, Transforming Future. And the winner is our past chairperson, CA Raja Gopalakrishnan. Sir, please join me on stage. May I invite our chairperson and vice chairperson to present the prize to the winner. Before I conclude, I also want to highlight to all of you about an exciting chance to win an Apple iPod. Please visit the tally counter and drop your visiting cards to enter the raffle. Now I request CA Arun Somanath to take the stage to proceed with further. Thank you.
Sponsors are always very important. We would like to take a moment to acknowledge and appreciate our incredible silver and support sponsors whose generous support has made this event a grand success. As a token of our gratitude, we would like to present a memento to our esteemed sponsors. Thank you for your continued support and for being such an integral part of our journey. And to present this, I call upon CA Kamlesh, our chairperson, and CA Kishore, our vice chairperson, to the dais. CA Kamlesh and CA Kishore. First, I'll start with annual silver sponsor. I request Mr. Dilip from Anvin Infosystem WLL to please come onto the dais. Moving on to the next category, conference support sponsor. BNW Developments, I think they are yet to come, so we'll move on to our next sponsor. Forviz Mazars, may I request Mr. Danish and CA Atif to please come onto the dais. Now I request CA John George from Fusion Group Holding to please accept the memento. Now may I call CA Soumya Krishna from Deloitte. Please accept the memento. Now may I call CA Gopal to kindly accept the memento from our chairperson and vice chairperson as a token of appreciation. KPMG in Qatar, again one of our sponsors. Now may I call upon CA Perry John from QIC to come onto the dais. Moving on to our next sponsors category, annual support sponsor, Alok K. Saxena and Partners. May I request CA Naresh and his team to please come onto the dais. Now may I call upon CA Rajesh Singh from Capita Consulting to come onto the dais. Mr. Badrik Shah from Focus Softnet Qatar WLL. R. Tulsian Global. Do we have CA Shashwat? Moving on to our conference support sponsor. May I call upon CA Anupam Kar from Gulfar Al Misnad? Do we have him here? We'll move on. I request CA Sheji and CA Dinesh from Preston SVP Chartered Accountants. Please come out to the dais. Lulu Hypermarket Qatar, CA Anil, he is not at the venue. We will hand it over to him later. CA Gaurav Khakkar from Moore. May I please invite him onto the dais? Mr. Raghu from Tally Solutions. All in alphabetic order. Thank you for your support. Now we move on to our next agenda. Stay here. To celebrate the historic and milestone event of a decade of hosting the prestigious event, our annual conference, we would like to felicitate our past chairs as a mark of gratitude for their dedication, commitment and continued support towards the chapter. May I call upon the past chairperson in their order of accession to the chair. CA Dilip Thakkar, sir. CA KC Dalal. CA KC Dalal. Sure, sir.
Is the love and affection that I have received, not only for years but decades, from so many of you. And this, I think, the love and affection that has brought me here. Thank you so much. Thank you.
CA MI Farid. Okay. CA Sunil Talwar. CA Ajay Dasani and CA Leena Dasani. Calling them as a couple.
Ajay comes first in chronological order, so in this case, ladies don't take precedence, the first chairman does.
So after CA Ajay Dasani, it's CA George Thomas. We'll move on. CA K. Balasubramania. CA Gopal Balasubramaniam. CA Sundareshan Rajeshwar. CA Ravi Shankar. Thank you. CA Girish Jain. For the year 2004, 5 and 2010, 11. Let me clarify, it is only one memento. CA Sanjay Jain. CA Kurian Kuriakos. CA Shiji Veliagat. CA Hatim Hussain. CA Rajagopalakrishnan. CA Gaurav Khakar. CA Rupa Lakshmi Shetty. CA Rupa Lakshmi Shetty. CA Rukhaiya Pachisa. CA Sandeep Chaudhary. CA Nirlab Bhatt. CA Ankit Agarwal. Thank you, Ankit. Now we would like to recognize our subcommittees for their contribution and hard work over the last few weeks. They have been incredible, and that is why we all are here now enjoying this session. I would like to call on to stage the committees one by one. I will not in particular take any names. I request all the committee members to kindly join in. First, I would like to call upon the Speaker Committee. Sponsorship Committee. As we don't have the flyer, we'll take the names. Sponsorship Committee, CA Kamlesh Tabrewal, CA Kishore Alex, myself, CA Gopal Balasubramaniam, CA Vignesh, he was trying from Tokyo, CA Sandeep Chaudhary, CA Anupam Kar, and CA Ankit Agarwal. Next comes our PR committee, CA Rakesh Baheti, CA Ashwathi Nandan, CA Manish Kumar, CA Suresh Nambiar, CA Jayati Maheshwari, CA Aarti Agrawal, CA Binal Shah, and CA Apu Philip. Logistics Committee, CA Rajesh Singh, CA Suresh Iyer, CA Vijay Saradi, and CA Anish and Brijesh and Rohit. Registration Committee, CA Devki, CA Dinesh, CA Biharilal Sharma, CA Murtaza, CA Bhagyalakshmi, CA Akil, CA Saumya, CA Nasiha, CA Santosh, and Shonak. Thank you all for your dedicated services for last 2 days. Venue Management and Backstage Committee, CA Ashwati Nandan, CA Manish Kumar, CA Raja, CA Rupal, and we have our students, Nirva, Rachel, Marcia and Drishti. Last but not the least, the Food Tasting Committee, the most important one probably. CA Kamlesh Tibrewal, CA Rakesh, CA Hatim, and CA Sheji. He's gone now. Thank you all the committees. Before we break for lunch, I would like to inform you that the prayer hall is on the first floor. With this, we take a break for 1 hour 15 minutes and we'll come back with a...
Thank you everyone. Let's meet at sharp 12:30 because we have a Ashcan-packed session in the afternoon, so we don't want to delay it. 12:30, we will have a raffle draw here for those who are in. So please, thank you, cooperate with us. Thank you.
lucky prize is worth 200 riyals gift voucher from Lulu. We have 2 of those right now.
Welcome to Aqua Arc, where the majesty of Ras Al Khimah's Jais Mountain meets the serene beauty of the sea. This is more than just a residence. It's a sanctuary of luxury and tranquility. From the moment you arrive, Aqua Arc exudes opulence. Our grand entrance, elevated 5 meters above street level, welcomes you into a double-height lobby adorned with lush plantations and cascading water features. Every apartment at Aqua Arc is fully furnished with elegant finishes and meticulous design. Our range of residences includes everything from cozy one-bedroom apartments to opulent penthouses. Experience breathtaking sea views and vistas of the world's largest resorts from many of our exquisite apartments. Our premium units feature private terraces with pools, providing a luxurious escape for the discerning resident. Aqua Arc provides world-class amenities, including an amphitheater for live performances, a recreational area for various activities, a state-of-the-art platinum gym, and a kids' splash pad for endless fun. Our community also features a barbecue area perfect for gatherings, a rooftop pool with stunning views, steam and sauna facilities for relaxation, and scenic walking trails for leisurely strolls. At Aqua Arc, you invest in more than just luxury. You secure your future at the heart of Al Marjan Island's elite community.
Meanwhile,
just
this photo
minutes from
session
the
is going
world's
on. I
largest
request
resorts.
all the members to kindly take your seats. Soon we'll spin the wheel to have our lucky winner. Let's see who are those 2 winners for the first session after the lunch. Those were all the current chairpersons of various GCC chapters.
Huh? He's there now. Good afternoon, everyone. I think we all had good lunch, so it is time to start the afternoon session. We are running a little bit behind schedule, but I'm sure we'll manage the time well. There is just a couple of announcements before I start with the introduction of the next speaker. There is a privilege card from Aster that is being issued to all the paid members of Doha chapter, which will give you up to 30% discount. So Arun has negotiated, the discount has increased from 10% to 30%. Thank you, Arun. Kindly collect it from Aster counter. If you have not visited, please visit Aster counter. Now, moving on with the session, may I request our past chairperson, CA Sundareshan Rajeshwarji, to kindly come on the dais to hand over the lucky draw. We have got 2 gift vouchers from Lulu Hypermarket, Qatar, worth 200 Real each. So 400 Real in total. Can we spin the wheel to see who is that lucky winner, please? I don't think that he's around. So I take the liberty of spinning the wheel again, please, until we get our member. Ahmed Tawfiq. Again, I think he's also not there. Quickly spin again. But don't tell Ahmed Tawfiq. See Georgie Augustine. Georgie Augustine around? So CA Georgie Augustine around? 1, 2, 3. Spin again. Ajay Tripathi, Deloitte. Ajay, is he there? Ajay Dasani can take it, yeah. I think, spin it again, please. You have to be in the hall. Leena Hari. Even I don't know. So I request, I will select otherwise myself. Spin it again. Manal. We should give it to Krishna Kumar, I think. Keep it simple. Again, spin. Do we have all the names who are not there? CA Nihar, Care and Cure. Oh, he's there. Come on. Thank you. Moving on to the second winner, may we again spin the wheel, please? Raghavina. Spin again. And is there? Please, quickly. Thank you. Yeah. So it was a bit more difficult than I thought. So moving on to the next technical session, I have privilege of introducing CA Vivek Bajaj. And I also acknowledge presence of his wife, Eti Bajaj, here as well. Thank you so much, ma'am, for coming. So, CA Vivek Bajaj is the seasoned chartered accountant and entrepreneur and a learner of the financial market for the last 20 years. He is the co-founder of eLearn Markets and StockEdge, two leading platforms in financial education and stock market analytics. Over his career, he has co-founded multiple enterprises leading a team of over 600 associates. With extensive experience in equities, commodities, and currencies, Vivek's career spans more than 17 years with a strong focus on proprietary and algorithmic trading. An alumni of IIM Indore, he has earned his MBA in finance. Vivek combines his academic rigor with hands-on market experience. eLearn Market, founded in 2014, aims to make financial education accessible, offering courses on stock market, investment strategies, and technical analysis. His second venture, StockEdge, launched in 2016, is a powerful stock market analytical platform that helps investors make informed decisions through data-driven tools and insights. Vivek is an active knowledge contributor with over 1 million social media followers, regularly sharing market insight strategies and educational contents. A passionate mentor, he conducts workshops and webinars empowering retail investors with the knowledge and tool to succeed. His mission is to promote financial literacy and market awareness across India. I request AV team to please play his introductory video.
Vivek Bajaj is a seasoned chartered accountant and entrepreneur, and a learner of the financial markets for the last 20 years. He is the co-founder of eLearn Markets and StockEdge, two leading platforms in financial education and stock market analytics. Over his career, he has co-founded multiple enterprises, leading a team of over 600 associates. With extensive experience in equities, commodities, and currencies, Vivek's career spans more than 17 years, with a strong focus on proprietary and algorithmic trading. An alumnus of IIM Indore, where he earned his MBA in finance, Vivek combines his academic rigor with hands-on market expertise. eLearn Markets, founded in 2014, aims to make financial education accessible, offering courses on stock markets, investment strategies, and technical analysis. His second venture, StockEdge, launched in 2016, is a powerful stock market analytics platform that helps investors make informed decisions through data-driven tools and insights. Vivek is an active knowledge contributor with over 1 million social media followers, regularly sharing market insights, strategies, and educational content. A passionate mentor, he conducts workshops and webinars, empowering retail investors with the knowledge and tools to succeed. His mission is to promote financial literacy and market awareness across India.
Please help me welcome CA Vivek with a thunderous round of applause.
Hello, everyone. Good afternoon, everyone. Yeah, so he just mentioned that all of you had good lunch. So I'm really worried that all of you had good lunch. I wish they would have spoiled your taste a bit. Anyways, I'll try to magnify a better lunch by giving you some food for thought. Although today's session is all about startup and how a startup journey takes a shape, but I have added a bit of chartered accountancy into this because startup and CA doesn't go well. That is not a very usual combination we have seen in our whatever professional pursuits we have gone through. Before I start this, thank you so much for inviting me. Especially Qatar is so beautiful. Doha is really beautiful. And I don't know how will I go back to Calcutta. And how will I survive there with this kind of amazing ambience and everything looks so perfect. I'm with my wife and my kids as well. And my kids were like, this is what we saw in that movie, isn't it? So thank you so much for organizing this event. So I'm going to take a couple of minutes of your time, your attention, talking about what has been the very satisfying journey so far and what led to whatever has been done in multiple ventures which I have created in this domain. Okay, so let me start with this that, I failed my first group of CA final exam. And because of that, I missed my All India 10th rank. And people who are rank holders in CA, could you make some noise? Oh, wow. I mean, we all know that how it is to be a rank holder in CA. It's like getting into IIM Ahmedabad, being a rank holder in CA. But I missed it because of that one goddamn subject where I failed. And I got distinction in all other subjects. So practically I had to only appear for that one exam, which I failed for only 4 marks. I got 36. Right, that's so bad. And the worst thing was that my batchmate, who I used to study together, he got a gold medal that year. That was depression. It was not that I failed, but he got a gold medal. I mean, my friend Amit Chaudhary, he runs a great startup in Jaipur. He got gold medal, and it was quite depressing news for me. So the best thing I could have done, not to magnify the depression, is talk to my father, right? Because he's also a chartered accountant. He's a company secretary, and at least that time, father were father. Now we are more friends with our kids. But yeah, so I went to him and I had a conversation, and he said, Vivek, don't worry. The full form of CA again is anyways come again. So you can always go back. You can come again. You can appear for the exam and pass. I also failed 4 times. And I appeared for CA after you were born. So I'm the 4th child. And my father appeared for CA after I was probably 5 or 6 years old. And he failed 4 times. But still he was doing it. Because CA DNA is that karna hai, wapas karna hai. Keep on doing it, keep on doing it. And that statement really changed me. That one single thought of his, come again, it really changed me, right? It brought so much of energy inside me. It gave me a very different perspective about life that, come again. This is what we all eventually have to do, right? So, what is come again? When I decoded come again, what he was trying to say is not to come again to appear for the exam. What he was suggesting that you are a chartered accountant, yaar. It is not a joke to pass a CA exam. It is tough. It was tough. It will always remain a tough exam. The core of come again was change, which as a chartered accountant, I think we are most adaptable to change if we really intend to. Opportunist, we are extreme opportunist people. Jahan paisa banane ka mauka milega, we'll go, right? And we understand finance much more than other people. M stands for mindfulness. That, I mean, I'm sure all of you will resonate with that the kind of mindfulness we have for every activity we do, right? Right from when we are meeting anyone or we are drawing finances or anything, we are very mindful people. That's why probably most of our startups are there to make profit. Because we are mindful people, right? We don't believe in this theory of keep on doing, and the profit will come eventually. That's not what CA education has taught us. And lastly is the execution, that we believe in execution. That's important. Whether we can talk about a lot of things, there can be narratives, but finally what is implementable, that should be done. So these 4 remained with me forever. And I did everything which a typical chartered accountant will not dare to do, right? That's the adaptability which this qualification has given to me. And, recording videos. I'm principally a very introvert person. The fact that I'm speaking in front of so many people, that amazing August gathering, it's also something, a dream for me, that an introvert who probably was a no-bencher in school, there are front benchers, there are back benchers, and there are no-benchers, which even your batchmate will not recognize, ki, "Arey, tum school mein tha kya?" I was that kind of a student. And coming and speaking to all of you is a pure push to change and to adapt to the new things which is coming in this new world. The world is so dynamic, it's changing ever. So I am a very strong believer of Albert Einstein, and a lot of things he has said which only the science community has comprehended, but as a human, every one of us can learn so much from his philosophies. So what he said was perfect, that every crisis, there is an opportunity, and every business I have gone into has been around some crisis which has come somewhere. Right? And in India, we have ample of those. Crisis is gifted by the government in India. They make sure that there are enough crises so that new entrepreneurs comes over and take opportunity in them. So the first crisis which I went through, which I saw an opportunity, was the US 64 crisis. How many of you were part of that US 64 crisis journey? It was a bad time. US 64 was one of the most trusted scheme, and late 2000, especially after the Asian crisis, US 64 got burst, and mutual fund was the worst instrument. It was literally an abuse to ask anyone कि mutual fund में invest करो, right? But then there was an opportunity when you know that it is tough to sell anything, and you get into the art of selling. That's where you learn the most. So after my CA final exam, that one paper which I had to appear, I went to Bombay and I joined JM Financial, which is the worst mutual fund you can ever think of starting your career. And I joined as a sales executive, which is the worst career you can think about. Why I did that? Because I knew that getting out of your comfort zone will only lead you to somewhere incredible. And it has to be the worst thing you want to do first, because that will give you so much of learning to push yourself to the next level. So I started with mutual fund as a sales, and I left the job and I got into mutual fund distribution on my own in Calcutta. I'm, by the way, from Calcutta. A lot of CA friends I can see from Calcutta as well. So good to see you guys. By the way, all Calcutta people have a structure in the face, a typical structure. And when we see each other, we say that you're from Calcutta. So I tried, I failed. That was the best thing that could have happened to me. First venture, failed. Fantastic. That gave me enough reason to be not so confident about myself, grounded. And that probably led to me getting into other ventures as well. The second big opportunity came in India was derivatives, which was launched in 2001, where everyone, literally 9 out of 10 people were criticizing the exchange. Ye kya leke aa gaye? This is speculation. Why? There's no need of derivatives in India. It's the worst thing you can do to our investors, etc. But I like those category of businesses where people criticize a lot. Because that's where most of the money is. That's where probably sensible people are not going. And we are slightly adventurous that we would like to figure out opportunities there because we are chartered accountants. So I got into this. I started trading derivatives in 2002 because I was not enjoying my mutual fund distribution business because it was a tough task to sell mutual fund after US 64. But I was not happy with trading. I thought I need to do something else as well, and I decided to do an MBA from IIM Indore in 2003. MBA was amazing experience. What MBA does is, CA build up a solid base, and MBA is like the cherry on the cake. It really teaches you how to deal with people. As a CA, at times we are very soft with people, and MBA makes you much more objective in your decision making and dealing with people. So learning with batchmates and creating a framework around decision making was the thing which I learned during my MBA times. And after my MBA, I immediately joined JM again. Again, the worst thing you could do to rejoin one of the bad firms. I mean, they are good people, but then they are not leaders in the domain where I joined. Commodities I was the first employee. Again, I joined commodities because it was a nascent market. 2003 M6 when CDX was launched. और जो market को कोई नहीं देख रहा होता है, somehow मुझे अच्छा लग जाता है market. I think that's probably one of the problems which I have, that always figuring out new opportunities in a nascent virgin market. So I got into MCX. I started my commodities trading. Fortunately, 2008. How many of you were part of 2008 financial market going up? I'm sure you remember how much money was made. It was amazing. Especially as a trader, 2006, 7, 8, it was like market was giving you money. Pretty much what it is happening right now. Market was giving you money. You have to be in the right place at the right time to grab the opportunity. And 2008 market fell. And I made more money when market fell, because a trader makes money both ways. When the market goes up as well as when the market... In fact, trader makes more money when market goes down. Okay? We always wait for market crisis to make more money from the market. Then, currency market was launched in India. Again, a big opportunity. One of the initial players which I got into, one point I used to do exchange 10% volume in currency segment. I overconfident probably that now everything what I touch was turning gold and I was making money in everything. Then 2009, algo trading was introduced in India. Let me share with you this story because this could be very interesting for you guys who are trading or investing in India. NSE came out with a circular of co-location. What is co-location? And NSE said that if you want to put your server beside my server, I will charge you extra money. I will give you a facility. You can install your server beside my server. The advantage of doing that is you get faster access to market data. So whatever bid and ask you see on the market, right, it's typically delayed. The fastest access of that market data is with the people who are beside the exchange server. And you get to execute the transaction very, very fast, which is algo trading, which is high frequency trading, which is low frequency trading, different modes of algo trading. So we got into algo trading. Again, I'm not a technocrat, so I didn't have any understanding about algo trading. So the best way to grab the understanding is to partner with right people. And as I said, CA plus MBA helped me to think from other people's point of view. And I built up a partnership firm on algo trading where there are 6 IITians and myself, and we do algo trading in India, HFT. We are one of the top 10 algo trading firms in India. We have been doing algo trading since 2010, when algo trading was introduced in India. Okay, so I'll just skip a few things because there are a couple of ventures which are smaller, very sweet ventures, like training people on algo trading. So we launched Quant-Insti, which is one of the largest global training institute on quantitative trading, algo trading. So a lot of people globally, they join these programs to learn quant trading. I've always been a very knowledge-oriented person. I believe that whatever you do, it should have a knowledge orientation. Like, Sir Ratan Tata, he passed away. One of the beauty of Tata Group is that whatever they do, there has to be an element of giving back to society as part of their DNA. So what I have done in all the ventures, that wherever initiative has to be taken, there is some knowledge contribution which should go back to society. So Quant-Insti was one of that initiative which we took. Then the big opportunity came when India was, financial market ecosystem was getting democratized. There was a lot of initiatives from the government which was making opening an account easier in India, and Zerodhas of the world were growing. And retail investor tsunami was waiting to come, right? That was around 2013, 2014. And I decided that let's try to build an ecosystem which Mr. Michael Bloomberg built for institutional investors. Let's try to build something which will help retail investors to become more knowledgeable, more empowered. That's how the journey of e-learn markets and stockage started. Again, an initiative which is very close to my heart. Why? Because it is actually leaving a very strong impact in the society, where the broader objective of helping retail, who has always been on the receiving end of the market. Most of the time, institutions or HNIs, they make money in the market, and retail is always on the losing side. But our endeavor is to remain a non-broker, non-media platform, and think from a point of view of retail that this is the right output, this is the right learning, which is required for anyone to become either a trader or an investor. So I've been an avid fan of Michael Bloomberg. I've been using Bloomberg Terminal for the last 18 years. And it's such an amazing thing. I think without Bloomberg, the world would not have been the same. It's such a beautiful terminal. The whole financial market evolution, Michael Bloomberg and what he has done. Then you have money controls of the world, which are media-backed, and their philosophy is more and more and more. So we decided, let's create a product which should be less is more, and which should be simple, no advertisement, and it should speak the language of the investor who wants to be spoken in the way they want it to be. So we launched Stockage, which is one of the largest, highest rated. It's almost 4.6 rated, 5 million downloads. And people who are very serious about their homework, their own research, they use this platform for their analytics purpose. There are people who also use money control, but money control is more for information and Stockage is more for analytics and customization. Then came COVID and the world changed. So, what I've observed that every 3, 4, 5 years, the world is changing. And probably this change will come faster than what we can think now. Thanks to AI, ML, the change has become so fast that at times I get worried about my kids that how will they combat this kind of a rapid change which is happening in the world. So YouTube came and the whole financial education and YouTubers came in, they started recording video. People like C.A. Rachana, Ranade and all those guys have done such a great work in bringing the larger mass into the mainstream financial market. But somehow I found there's an opportunity for me to create content which is more relevant and which will probably have more utility value than just recording video for the sake of recording video. That's where my journey of YouTube started in 2019. And we created Face to Face, which is India's largest finance podcast with around 255 videos recorded, around 70 million plus views. And if you have time, please do go to YouTube channel of eLearn Markets. Some people find the work very, very exciting. If you want to learn the art of trading, investing, options trading, value investing, cyclical investing, from real people who are making money from market by doing all these things, Face to Face has done very good. Then I recorded Learn to Trade, Learn to Invest, which is, some people call it like a benchmark learning series for people who want to learn trading and investing, absolutely free of cost. So that led to build up of some credibility in social media. Probably because of that, I'm here. I've been given opportunity to speak to you guys. Social media is such a powerful thing. I always say this to all the youngsters, and please do convey this message to youngsters in your family that get into social media as early as possible, because the real power of compounding works there. If you delay, there's a lot of things which will get delayed in your life, right? You just have to pick one platform. I started with Twitter, now for subscribers there. What it does is, which is ready to listen to you, hear you, probably subscribe to your product, probably an audience who is probably a ready customer for you in some way, if you want to consider them to be a customer. Or it will give you a social bank for yourself, your presence in social platform. And every entrepreneur, any businessman, eventually, be it a startup or a normal entrepreneur, you will have to get into social media in some way or the other. Your presence have to be felt there. And I know that every social media influencers or inspirational people, they will start their own business, right? Some of them will become successful politicians. I can clearly name a couple of social media influencers in India who will become a politician also in future. So that is one big community which has developed. And I know as a chartered accountant, we are always very not so comfortable with recording videos or expressing ourselves openly in public forum. But at least your next generation or whoever is thinking of starting something in future, you should have a very strong social media presence. The later, the delay we do, it's going to be very tough, because now getting followers is not as easy as it was when you saw during the COVID times. So I'm still searching for new crisis in India, new opportunities, and the format of opportunity, the flow of opportunity has changed. I think there is tremendous opportunity in using AI and ML in the domain of financial market. Already the algo trading world, just to give you a perspective, around 65% of India trade is happening from NSE colocation, which is an algo, okay, 65%. Only 35% actually happens outside colocation. And you can safely assume that out of 35, 10% will be still algos, which are doing low frequency trading. They don't need colocation. And manual trading in NSE will probably 20, 22%, not more than that, right? And mobile phone trading is almost 30% of that. So there is huge application of AI, ML in financial market. We are still figuring out how to make that decision-making journey of individual more process-oriented and more customizable to every person's need. The problem with today's fund management industry is that it's a generic product which has been offered to everyone, right? So they, not at the high level, let's not talk about the PMS, but let's talk about the retail who is investing 10 lakh, 15 lakh, who is investing in mutual funds only. The problem is that the same NAV is applicable for everyone. Same portfolio is applicable for everyone, which should not be the case because his risk appetite could be different, his risk appetite. So there is a massive need of customized equity advisory at retail level so that everyone gets the portfolio which that person is supposed to get based on the risk profile. So a lot of innovation is happening there. We are also trying to use machine learning to figure out the character of every individual and then try to recommend a right portfolio for that individual. But the search is still on. New initiatives will be taken. And I hope we continue to do what we are here to do. So thank you so much for your patient hearing. I love to connect. In case you have any question related to Indian market, if you want to connect with me in some way, if I can add some value, please do use this email ID and connect with me. Thank you so much. Happy to take some questions if you have. I have a couple of minutes. I can spend time with you guys. Do you want to know the market view?
Yeah. Yes, if you can throw some light on what is happening in the market. Indian market.
So let's talk about markets for some time.
Yeah.
Okay.
Especially this morning, actually, you saw.
Especially?
This morning.
This month?
Yeah.
Yeah, what happened? Why market fell down this month? Correct. So, as there are a lot of biases, human biases we are living, right? So obviously, when market goes up, we don't want to ask that question, that why is it going up? But yeah, when market goes down, it's a natural thing for us to know about it. So let's do some data work and find the reason why market has gone up in India as well as globally. I mean, I believe Nasdaq is also trading at almost at an all-time high level. It's not that Indian market is trading at high levels. Surely, Indian market has seen a high beta because of the structural changes we have seen in Indian market. I'm sure many people would have communicated this to you, and you are intelligent enough. I'm not no one to tell you what structural changes India has seen. So India has been a high beta country, and everyone want to invest in India. At least now Indian investor has agreed formally that we trust our promoters and we want to invest in them, which was not the case earlier. So if you look at the data, currently Nifty is trading around 22 and a half price earning multiples, which is on the higher range, almost at the medium to higher range of the historical valuation which market has given to it. So are we expensive? The answer is no, we are not expensive. Okay. And if you listen to people like Manish Chokhani's, who are like amazing people, you should definitely hear. This rally will make India definitely very expensive, right? Last time India became extremely expensive. When I say expensive, it is vis-a-vis the earning growth, because I mean, we can't look at Nifty 24,000 and say that market has become expensive. That's not, at least the chartered accountants will say. A normal public will say the same thing, ki, "Arey 9,000 ka Nifty 24,000 ho gaya, bahut mehenga ho gaya." No, it's an earning relativity which we have to look at. So from a growth perspective, from an earning perspective, are we expensive? The answer is no, we are not expensive. So do we expect a major correction, like a fall, 15-20% fall? Definitely not, because if you look at the sector-wise earning growth, which has been there for last couple of quarters, it has been quite impressive, very impressive, largely driven by government spendings. This time, last year at least, private enterprises, they did not spend so much money in capex, but government did amazing job in making sure that the growth machine is enough lubricated that it should run properly. Now the question is whether that will continue. Will government constantly, given that the election result was not so favorable, and now government also has to look at the rural economy, there the net inflow will not be as great as it was in urban economy. So maybe a bit of, I would say, consolidation, stand-on phases, that probably will be there. But in terms of long-term, for me, long-term is 2 years. I don't see beyond that, because finally we don't know whether we'll survive after 2 years or not. So from a 1 to 2 years perspective, frankly speaking, I don't see a major challenge somewhere. A bit of correction. So 4-5% correction has happened this month. Like, because we look at the absolute number, Bank Nifty 1500 point gir gaya, Nifty 800 point gir gaya, 2000 point gir gaya. The absolute numbers puts that negativity in our mind. But 5% is just correction. It's just fine, right? So if you're invested, then I would say the best way to investment, which I promote everyone, is sector rotation. Because in India, there are so many sectors, so many stocks, and there are different sectors emerging as a tailwind. So if you can early identify those tailwind and participate in a sector, I think there's still a lot of money to be made. Look at financialization theme. There is one thing which I catched up early, and I made decent money in that theme. It is a no-brainer theme. The number of people who are participating in financial market ecosystem, non-banking, like the mutual fund, like the broking, etc. There is no reason why we should not be bullish on them, because we have just started this whole journey of financialization in India. और अभी तो हमने इंडिया ही कवर किया है, भारत तो हम गए नहीं हैं. There are only few brokers who have actually gone to Bharat and catered to their investment need in the right manner. There are still banks who are dominating there. So slowly and slowly there will be new gen wealth platforms who will get listed, and they will do such an amazing work in reaching to Bharat. And we have great opportunity to invest in, especially on the unlisted space. If you can early identify them, the real meat is there right now.
I believe that there is, some way Indian retailers are suffering, retail investors are suffering on the leverage of foreign institutional investors, because they have taken the market to a different level now. All the kids have invested, put in the money because of low brokerage charges, and all these companies have come up. So they think that it is easy money, and what kind of social benefit your platforms is going to give to them.
Okay. So let's again share, I'll share some number with you. Where you hear the interviews of Nitin Kamath, he says that the guys who came into the market post-COVID, who we defined them as a retail, their balance with Zerodha is 50,000 rupees, right? They came into the market because they believe that it's a great way to utilize their time. It's a great way to kickstart their journey of investing and learn this whole art and science of investing, okay? So practically, those are not the guys who will low in Indian market. Now let's talk about HNIs, who are like the real people who have gone into the market directly, moved away from FD and putting a lot of money into the market, right? They tasted money in mutual funds. No one in India thought that mutual funds will give them 50%, 60% return. Anyone who is invested in quant mutual fund, you must have received at least 35, 40% CAGR return in last 2-3 years. You would not have imagined the kind of money they will make, right? Now, what do you do with this kind of a money you have made? You start questioning this, that, why can't I do it? Can I invest more? So that HNI tsunami is coming to stock market directly and investing. And I feel it's a very sticky long-term money, because even if market goes down and their stock price will go down, they are not in a hurry to sell. I mean, if your stock goes down, you will not sell. You will like, okay, let it be, because I am sure this will come back again. So I don't see a fragileness in Indian market as far as retail participation is concerned. And FIs will come and go. So I think they are anyways under-invested in India. If I remember the data correctly, it's only 3% or 3.5% of global liquidity money, which is hedge fund money, which is parked in India. It's just too low for us to really worry about that.
Hi. How do you see this unlisted space, unlisted investment space, mainly this startup ecosystem, this way?
Yeah. I think it's a very exciting opportunity. There was hype, overhype at one point of time with race to unicorns in our country, where the entire ecosystem was trying to create more unicorns, because सबको मजा आने लग गया था उस समय. That was where the overhype of the ecosystem was created. But there is a new regulatory change which has happened in this budget, is the angel tax. There is no angel tax now. I think this will definitely give a new set of investors, not that this will encourage people to invest, but there was a set of investors who were getting discouraged because of this, because of ambiguity, because of income tax notices we were getting. So we kind of stopped investing in startups because finally we were not sure how the government is going to treat us. But now that ambiguity is resolved. And the next layer of big innovation-led investment is coming from startups. So with a 5-year view, I think investing in baskets of startup is a great idea. Because listed space anyway is expensive over here. Look at the P multiples of all the growth stories. Nothing good is trading below 50 P these days. So where do you go? You have to go back to slightly lower early cycle businesses to generate that extraordinary alpha. That's why SME segment has done so good. Because the main segment return were already made, and it was not the risk reward, the margin of safety was not good. So people latched into SME segment. Now people will go to a lower early cycle businesses, which is startups.
Hi Vivek, thank you for taking out the time to be with us. I'm part of your 1 million on YouTube. I wanted to understand that, you said that something very practical, retail investors don't make money. And that's when you thought of the Stock Edge, to give your insights and machine learning capabilities and analysis to the retail investor. Have you done an analysis of any of your user-generated content to know how is your member community performing, that community of retail investors with your product? And like, for instance, I keep challenging myself, can I beat my Quant or my Nippon Mutual Fund Manager, So what is that output? I really want to know.
So, the real result will be out when market goes down. Right now, what is happening, everyone is making money. Everyone. So even though we look at the data, we have the portfolio data of people who are investing either through us. We are not brokers, but people can invest through us using their respective brokers. People are making money. Cash market is actually no-brainer. Everyone is making money. Some are beating the benchmark, some are not beating the benchmark, right? But the real test will come when market goes down, whether they will book their losses or they will have conviction in their model that they will sustain. That is yet to be discovered. Because India market doesn't stop. I mean, it falls and someone is always there at the lower levels to buy. See what happened today also, that Bank Nifty was red and now suddenly it is green. So we don't have that hypothesis to prove that anyone uses us or any other product will consistently make money because they have not seen the fall yet. Yeah.
Yeah, thank you. So I'll repeat my question. So do you think the AI will take over the stock exchange in the future? Like, we just need to wake up in the morning and just, ask the AI search engine, like, which stock we should invest, which stock not to invest, and they will do the work. Maybe 10 years down the line.
I think it could potentially, yes. It could. 6 months ago, I was not great fan of, the last 6 months, I have done a lot of homework in this domain because even we want to build AI modules inside StockEdge. I think 10 years is a long time. I think in 5 years, we can reach there. So maybe look at these stocks.
Thanks.
We are trying to capture all kind of data related to you. So we'll make sure that we know whether you have fever today or not.
Hello. Hi.
Hi.
Hi, Vivek. How are you?
Good, good.
Just like Soumya, I'm also part of your Million community and a big fan of face-to-face. I have a quick question over here. There are a lot of pre-IPO investment opportunities right now, right? And there are certain platforms, they give you that opportunity to invest in those. But the kind of analysis or the data that is available for the listed companies, of course, is not available for pre-IPO investment, right? Is there something that StockEdge is looking for? where we can have more analysis, where we can do a bit more deep dive and make a more informed decision before investing into a pre-IPO?
Yeah, so it's a very valid requirement. Pre-IPO is a bit of gray area, but the largely traded unlisted stocks, there's still a lot of data available on internet. But the one where not many people own them and there's no liquidity in them, it's difficult to get the data. We have MCA website from which you can get the standard data points, but at times, I mean, most of the time the website is slow, so it's difficult to retrieve data from MCA. So, I mean, that's where probably the opportunity is. अगर सबके लिए easy हो जाएगा data लाना, तो फिर वहाँ जो अभी opportunity वहाँ पर है वो शायद नहीं रहेगी. तो what I've realized in pre-IPO, in four walls, remaining close to the management is actually the best way to find opportunity. And you need to get access to the promoter. You need to be there with them to know what they are doing. Otherwise, data is very limited, information is very limited. Some people use LinkedIn algorithm, the number of employee count, and how many people were added. These are all alternate data points some people are using to gauge. But finally, if you want to invest big money, then the right people are the promoters and understanding them. छोटा मोटा पैसा के लिए तो data मिल जा रहा है.
Lovely question, Vivek. This is on the front here.
Yeah.
I loved your session. And I like crisis is equal to opportunity. Any crisis can be an opportunity, the way of life. One question from my side. I have seen index going from 20K, around 20K to now 80K, almost 4 times in last 10 years, 10 to 11 years. People are thinking about will touch 100K, given India growth story, which is coming up. You have been trader for long. What's your take? Do you think there is a correction before we touch 100K, or you think no, this is an upward journey, 100K, India is on that mark, or you see no, there will be a correction and then something will go to 100K in next 5 years domain? You have 2 years, but I take it as a 5 years domain. Then what do you think? 100K.
So I wish I could have showed you that graph of how Nifty has behaved. I mean, if we exclude those two major falls, which were not controlled by us, it was driven by external forces, the Asian crisis, the dot-com crisis around, and then the COVID crisis. अगर हम उन सब को हटा दें और Nifty को add कर दें, तो Nifty is not fallen more than 15% in a year. And that's how typically a bull market is. A long-term structural bull market की गिरेगा भी, it can fall, but it will not go below 15, 18% and again come back again. When big people like my guru Ramesh Damani ji, etc., they used to say कि Nifty Sensex 1 lakh हो जाएगा. अभी people have started saying Nifty 1 lakh हो जाएगा. तो I used to find it very amusing कि यार ये कुछ भी बोल देते हैं लोग. 1 lakh हो जाएगा, 2 lakh हो जाएगा. But then when I investigated this, that they are saying this, they are not stupid people. They are making public statements. Like क्यों? क्या basis है? Then I put my CA cap and I started thinking कि ये लोग क्या basis पे बोलते हैं 1 lakh हो जाएगा तो. Then I realized a very simple logic that ultimately stock price is a reflection of retained earnings, right? Companies earn money, they give some dividend, they keep major part of the money as retained earning, and that retained earning is used for further capex, further growth, and retained earning will generate more retained earning. Now, in a listed company, if there is certain retained earning, where will the shareholder get benefit of that retained earning? Is there in the balance sheet of the company? उसको benefit कैसे मिलेगा? Because dividend तो उसको दिया नहीं, right? That is stock price. Stock price is nothing but a reflection of the cumulative profit and retained earning which the company has. So logically, if GDP growth is happening, companies will keep on making money and the retained earning will go up and the stock price will go up and the index will go up. So theoretically, it will always go up. तो कहते हैं ना कि इंसान हो या मार्केट, जाना ऊपर ही है दोनों को. So it will go up. But there will be corrections. Now corrections, again, a very good book by Mr. Parag Parekh, which I would seriously recommend if you can read that book, where he said that a stock price has two components, intrinsic value and speculative value, right? Intrinsic value is the business value, which has to be there as the business, and speculative value is actually driven by the interest rate cycle. अगर interest rate cycle नीचे की तरफ है, तो there's a lot of money in the system, which will lead to stock prices going up. And when interest rate cycles turn, which in current scenario is so different, no? Even though interest rates were going up, stock market was going up. Ideally, nahi hona chahiye tha. You see what is happening is US has such a big advantage now, that now they will reduce interest rate. And they can pump in more money inside the system and stock market can go up from here. So we are living in a very sweet spot globally where stock prices can go up further and remain irrational for a long period of time.
Excuse me. Thanks for the wonderful briefing on how the stock market behaves.
Yeah.
Said that AI is going to be in the taking decision of the investment. Do you AI tool is too common to all the investors? Then how the market will behave differently when everybody is?
That's a great point, sir, you have raised. And if everyone does the same thing, then how will you generate alpha from the market, right? And that's why money globally is moving away from active funds to passive funds. That, okay, let's keep on investing in passive fund because that's market return and I'm okay to generate market return. But I feel, sir, and I'm still into that stage of figuring out that whether creating a customized portfolio for everyone, which will give that extra edge over market return, will give you some extra return. I'm still figuring out, and I think there is a way to do that.
No, you are right that even sugar trade, commodity trade, now more than 50% trades are being squared up by the machine. In Chicago or some exchange. But if this is the common tool, then it does not take away the vibration of the market or the decision makers of the human being.
I think we are in for some trouble here. I mean, we have to start believing that machines will take far better decisions than us. I know this is very far-fetched statement from me, but and especially when I'm seeing the videos of Elon Musk releasing that robot, it is very scary. We are now producing machines which will eventually have better intelligence than us. And stock market decision making is very objectified. You can remove subjectivity from stock market decision making.
Particularly then AI is now at a, you can say that very initial stage like traditional database, then it will be generating, then it will be cognitive AI, which will take the behavioral part of the human being also into account. And the AI will be the far better decision maker than the human being. Because it will not have a human error, biasness. So really it is something that for decision-making market where the quality of data available is very high. Particularly for stock market. If you see that you can pull out the 10-year data, 20-year data, and there's all quality data without any biasness or without any flaw. In other cases, you have to still make the organized structure for collecting the data. But the index or exchange are available. That, according to me, is the big assets for the AI tool, and investors and the like your people who are deeply involved in analysis and decision making and developing like stock is. I'm also one of the user of this app. So fantastic one. It's useful. At tips, everything is available whenever you want something. So these things will be more, according to me, powerful than the investment manager. That is what I feel.
That's true, sir. Just giving you a perspective, we do high frequency trading, and the level of competition there within machines have gone up so much that now we are talking about a nanosecond latency. We are not talking about milli and micro anymore. And to achieve nanosecond latency, to hit the exchange server first, the coding is actually done in the FPGA card, which is nothing but a display card. So you don't actually code in a software which is in hard disk. Now you're actually coding the tool, the software, in that display card to reach the maximum level of efficiency and the least latency. Now, how will an intraday trader, human, make money when two robots are fighting to that extent of nanosecond latency? I think this is, in trading domain, it is already there now. As a trader, it is getting difficult. It will get difficult unless we get COVID where, the volatility was high and people were making money by selling put options and call options, which there is an army of traders in India who's made a lot of money by selling options. But investing में अभी तक उतना ज़्यादा tech का dominance नहीं आया. I think coming 5 years we will see that.
So there was an update from RBI on the asset class between property, gold and equity. And the data says 50% of the India's assets are in fixed assets, property, and 5% is only in equity.
Yeah.
How does it compare with the matured markets? And do you see this 5% moving up in the next 5 years?
That's where the big opportunity lies, sir. Although we will not, the point is the base is also increasing. So we are not saying that this base may 5%, 50%. We are saying that the base is now increasing. So the increasing in the base, which is the younger population, the more people who doesn't want to own things now, they are geek people, so they are okay with the rental. That new generation, they are investing in more equity. So that percentage, 5% will go to 10, 15%, not because necessarily people will sell property and invest there. In fact, there was a recent report by a property consultant. It's actually the other way around. People make money in equity, and then when they get scared, they start investing in equity, in the real estate, because they feel that real estate, to rahega hi. I mean, I will not lose money because now I made money, and the best way to park the money is real estate. But the new population in India, which is massive, they are investing in equity. They don't believe in real estate at all. In equity, and to a certain extent, they are experimenting with mutual funds, but eventually equity. Thank you. Oh, I've taken a lot of your time. Sorry. No,
allowed. Actually, all are being diplomatic. The main question that they want to ask, what it will take Vivek Bajaj to name 5 stocks which will do 50x in the next 3 years.
See, he's telling me bolna bhi mat, naam mat bolna. See, I can tell you 5 names, I can tell you 10 names, 15 names. But I will not be able to inform you when to exit. आप खुद ही सोचिए, that's where my disconnection with the media is. That you come on the TV and you tell stocks and people will buy your stock. But you never come back again and tell people to exit. And stock market में बताओ, real में पैसा वही बनाता है जिसको exit पता है. Entry तो कोई भी कर लेगा.
Thank you, Vivek. Just a minute. I think it has been one of the most inspirational journeys that I have followed since last 5-6 years of Vivek. I feel whenever I see him as a next door CA, I can personally resonate that if he can traverse this journey, any one of us can. A very humble human being, and that is why he was my first selection for Startup Surge. He confirmed to me 2.5 months back that he will be here, and based on his confirmation, this entire journey started. I would request our past chair Rukaiya and Vice Chair Kishore to come on the stage to present a memento to Vivek for the efforts that he has taken to come to Doha. With this, I would request our chapter treasurer Devki on stage to take over the next session. Thank you.
Dear members, good afternoon. Meet Satyajit and Ajinkya Hange, the visionary brothers who traded their corporate suits for a pair of farming boots. As co-founders of Two Brothers Organic Farm in Maharashtra, they are not just growing crops, they are cultivating a sustainable future. With a commitment to regenerative practices and indigenous seeds, they empower over 9,000 farmers while turning heads with their innovative approach. Recognized by Prime Minister Modi and features as top innovators for social good, these fourth-generation farmers are living proof that they can blend modern education with ancestral wisdom to make a lasting impact. Can I request AV team to play introductory video?
Satyajit and Ajinkya, fourth-generation farmer siblings, manage a 21-acre certified organic farm in Bhodani, Maharashtra, practicing all-natural, regenerative farming. Raised in a farming family, they attended the Bishop's School, Pune, living mostly in the city from kindergarten to post-graduation. Despite their urban education and nearly a decade spent climbing the corporate ladder at MNCs like Citibank, DBS, HDFC, and HSBC, their hearts remain tied to the land. During holidays, they eagerly return to their village, where their passion for farming deepened. In 2011, the siblings co-founded Two Brothers Organic Farms, TBOF, leaving their banking careers behind to pursue farming full-time. TBOF uses indigenous seeds and traditional farming methods, producing organic products in small, daily batches at their farm kitchen. The Honorable Prime Minister of India, Narendra Modi, highlighted their efforts on his Mann Ki Baat platform for empowering 9,000 farmers. In 2020, TBOF was also recognized as one of the top 10 startups innovating for social good by Your Story. Today, Satyajit and Ajinkya continue to lead the way in sustainable agriculture, blending modern education with ancestral wisdom.
Thank you. I'd like to please help me welcome Satyajit and Ajinkya Hange with a warm round of applause.
Thank you, and good afternoon, everyone. I never thought going back to the village and wearing a pajama and shirt would be shown out here someday, but a pleasure. And yeah, so I'm Satyajit and Ajinkya, co-founding farmers of Two Brothers Organic Farms and Brothers.
Good afternoon, everybody. Thank you for having us.
Yep. So, a little introduction was given about what we do and how we do it. Delving in a little more detail, the topic given to us was conscious capitalism. So, everyone is talking about development. The last speaker, Vivek, spoke so much about it and took us through it. But if you really look into detail of the kind of development that's going on and is it sustainable? So just 100 years of this kind of development and 75% forests have gone. 30% of cultivated, arable land has gone. Large mammals are down by 90%, large fish are down by 95%. These are not good percentages, by the way. And half of all the species will disappear in the next 50 years. And the rate at which we are growing, and everybody wants to become the next United States of America and follow that development model, even in India, will require 5 Earths, resources of 5 more Earths to even copy what they have done in the last 40, 50, 60 years. So is this all sustainable is the question. Today morning, I was just surfing through my LinkedIn posts, and I came across this post, and this is an amazing feat that's been achieved by Elon Musk and SpaceX, where they have managed to get this, thing down, being so heavy, and it's an engineering feat. And I was wondering, is this the future? If Earth is, what we're doing to Mother Earth, are we trying to find a future in some other planet? And is the way that we have used resources, even if we find another planet, in the next 50 years, we might even destroy that other planet. While this engineering feat is commendable, but I feel we are looking outside for solutions. And the answer lies very near us in how we do what we do. And I think that's where we should be focusing. While scrolling, I again came across this post, and it was mentioning about how the quick commerce revolution is happening in India, and major brands that are doing very good in quick commerce. And there are a couple of brands mentioned, and I was trying to figure out who amongst these brands are really sustainable. Who amongst these brands is a net giver rather than a net taker, not only from the economic ecosystem, but also from the ecology. And it was tough to find answers out there. And then another post, and this is all today morning only, and I came across somebody who posted about people sleeping on the streets in Delhi, and they have come from rural villages where they do not have employment, where probably global warming effects have hampered their livelihoods, and they've come to the city and trying to find and make a living. And while we all talk about and know about global warming, it's these people, it's peasants and farmers who get the most affected and the most affected very easily. And finally, I found this, funny little post which said, there's a live monkey sitting beside a statue monkey, and he's trying to tug that monkey and play with him. And somebody's written, poor langur, completely confused. But it just made me ponder whether that langur is poor, or have we made him poor by, occupying his space and by occupying more and more forest land to build all the, concrete parks that we are building. And then, I just was scrolling and I realized that all the education today offered by all the premier universities are in these amazing courses that 99% of young students want to follow, the MBAs and BBAs and everything. And is there any course for teaching young people how to make and how to sustain the environment and how to recycle and how to do farming and grow food in a sustainable way? But I couldn't find any. So what is conscious capitalism? And what constitutes conscious capitalism? I could just figure out 3 or 4 things. One is a higher purpose. Today, profit making is the end of every corporate organization. Nobody is thinking about a higher purpose than profit. And we could do all this because there were resources. But today, if we even prioritize and keep on prioritizing profits, someday the system which sustains all of us won't be able to sustain this motive. There's also, conscious culture and conscious leadership which constitutes conscious capitalism. And by conscious leadership, I mean, leaders who are purpose-driven, leaders who are authentic, leaders who are emotionally intelligent, leaders who are, who have a strong character. And, me and Ajinkya both worked with Citibank and HSBC, and when our yearly appraisals came across, we were never marked on these things. And even today, organizations in their KRAs and yearly appraisals don't look at professionals on these, on these criteria. They're looked upon on how much, business and how many targets and what ROAS and, everything else, but this. And it's time that I think even leadership should include and should be kind of evaluated on these factors. And I came across some interesting posts also where people are innovating and making, some of the other product without chemicals but with natural ingredients that are sustainable. I came across this farmer who's made a tractor with very less resources, 1/10 the price of, regular tractors. And I was figuring out, will anybody fund him? Will anybody support him? Will the ecosystem that we have put across, all across, for startups even help him scale up or help sustainable businesses scale up. And why shouldn't they? Because in the long term, what does conscious capitalism do? And these are all case studies that have been recorded. It enhances reputation, of course. In a world of social media, this is very important. It also increases employment engagement, and it has a positive social impact and so many other things. And while this is very theoretical, you all must be wondering, is it even possible? When you look around companies and corporates, we find very less examples of people who are doing it in this fashion and yet profitable and yet growing. And that's where we come. And that's where the story that I had got along with me is something I want to share with you all. It's a story about two brothers' organic farms, which was started by me and my younger brother Ajinkya. Both of us are farmers' sons. We were born in a small village called Bhodni, which is in Indapur Taluka in Pune district in Maharashtra state. And our dads, he put us up in a boarding school. He said, don't come back to the village. When we were 4 years old, we were put in a boarding. And from lower KG till post-graduation, we studied in a hostel and boarding. And parents were very clear that don't come back to the village, don't come back to farming, because there is no future left in farming. In the last 40 years that he has been doing farming, there is no economic sustainability, there is no social respect. Farmers' sons of farmers do not get eligible brides, so as to say. That's the social, condition of farmers and people who do farming. So they were very clear. And we followed, and we took our education, did our MBAs, did what society wanted us to do, and started working in the corporate sector. But during our holidays, in the Diwali and summer holidays, we always used to go to the village, and we have a 100-year-old house that's made out of stone, mud, and wood, and we used to have buffaloes and cows in front of the house. And somehow both me and Ajinkya loved that, that house and that field and the farm and the village life. And when we were faced with this, 4-5 years working in the corporate field, when we questioned ourselves whether this is the life that we would want to live, even if we got these fancy designations and got to roam these fancy countries, somewhere both of us decided that that's not the life we would love to live. It's farming and coming back to the village that we would love doing. And after 5-6 years of unconditioning the conditioning that we had from society and parents, we finally left our jobs and came back to do farming. Now, the grass is always greener on the other side. It was greener on this side rather than a corporate side. But we realized that this grass is not sustainable. The way farming is being done in the last 40-50 years, especially after the Green Revolution, all the methods are unsustainable. The usage of nitrogenous fertilizers, pesticides, the soil holding capacity of the soil has gone down. And soon we realized that we're heading towards a disaster. In the last 40 years, soil fertility has come down by 50%, which had not changed in the last 500 years. Water holding capacity has gone down by 70%. And soon both of us realized that we would not be able to do this all our lives, and we would have to go back to to doing a job if this is not sustainable, and started experimenting. So we got cows. In the last 20 years, cows had vanished from our house, tractors had come, implements had come, which is good, modernization is nice. But we realized that if the cow doesn't come, if the manure is not there, soil fertility is not going to increase. That little bag of nitrogenous fertilizer is not going to add to anything in increasing soil fertility. So we got the cow, started making manure, and started having fun also, but started growing food the sustainable way. I think after 2 years' time, because both of us did not have any education in agriculture, nor any experience in agriculture, we managed to grow a nice little papaya orchard and a pomegranate orchard. And that papaya tasted like jaggery. It was very sweet because it was grown organically. But from the outside, it was ugly. It has blemishes, it had spots, it was unequal in size and shape. And we thought the present system which buys farmers' goods, the mandis, would reward us for growing such a lovely tasting fruit. And we took it to the mandis at 4 a.m. We underwent that auctioning process. And the trader came back to us saying, your fruit has a value of 4 rupees a kg, whereas the market was trading at 8 rupees. Said, the consumer eats by, and your fruit doesn't appeal to the eyes at all. But having put 2-3 years of labor into this, we realized that if I'm going to go and sell it in the same market that sells chemical produce, I am not going to get the right value for it. When we started farming, there was no idea about creating a brand or a business. Both of us were MBAs, but we wanted to enjoy farming and be in the village and work in the soil. But when we realized that if we couldn't sell our produce at the right price, it's a no-brainer. We'll have to go back by selling and by exhausting all our resources. So then started the process of marketing and branding our goods and then selling it to the right buyer at the right price. We started off actually selling with handcart vendors on the bridges and then got into retail shops and then formed our own online presence 6 years back after doing a couple of farmers markets and then started growing the brand and the business very organically. After having done the business, growing the brand, having done farming, we realized, why do we want to keep doing this? We have done it for the last 7, 8, 9 years and have had our learnings. Why would we want to take it ahead for the next 15, 20 years? And having worked, in all these 3 aspects, we realized that this is a vehicle that is doing a lot of good for farmers because after our experiments, many farmers started coming and learning from our farms on how we were preserving water, on what mulching is, on what intercropping is, on what indigenous variety seeds are, what is a food forest, what is, a border tree wall. And farmers realized that I was needing 1/4 the water that they were needing. I was producing and making products that got me a value of 2x than what they were getting. And then many of them came up and we started sharing our experiences with them. And we realized that going forward, we want to increase this circle where more and more farmers can practice sustainable farming and yet earn more than what they were earning doing chemical-based farming. On the other side, while doing farmers markets, we had developed a community, and online we were selling, so the consumer was ours. We could speak to him, and we realized that many people were benefiting from consuming the food that was made without any chemical fertilizers, any additive, preservative, binder, filler, essence, color, perfume, and people were actually, coming out of chronic illnesses, and it was benefiting them. So we realized that that is one circle that we want to work and grow. And both of us having worked with HSBC and Citibank, we knew the culture that was there, especially during month ends, the kind of pressure, the kind of unhealthy environment, while working in such high cutting edge, profit-driven corporate organization was. And somewhere we had told ourselves that when we create a little organization or something, we would have a culture that would allow people to grow creatively, spiritually, and professionally. And so that became our third objective of, helping more and more people who want to work and earn money, but work with purpose-driven, to accommodate them and to grow along with them. But how did we fare on the business front? What started 6 years back as an online shop experiment and, selling the ghee that we make out of a cow's milk, the jaggery that we make out of sugarcane. 100 years back, my grandfather used to make jaggery, but in the last 40, 50 years, that activity was stopped. Sugar factories came up. There were large sugar factories working with thousands of farmers. These small jaggery units shut down. We restarted that jaggery unit, told consumers why consuming jaggery is better than consuming white refined sugar, started making, moringa powder, everything on the farm, all the fresh produce, the fruits and veggies became a product that could last on the shelf for more than 12 months. And simply said, we started doing the farming that our grandfather did, the way he did, and started making food like our grandmother did, the way she did. Simple things of making ghee by churning curds, by making jaggery using ladyfinger extract as a coagulant, and all that traditional knowledge became our product knowledge. And 6 years back, in the month of November, we opened up our online shop, did a business of 23,000 bucks on the online shop. Did not know how funding worked, did not even eye funding, grew out of internal accruals, leaving me and Ajinkya. The highest educated colleague was Vasant Mama and Pandu Mama, who were 6th pass and 5th pass. And with that team, this month, of course, in the last 2-3 years, we have had many like-minded people who are qualified professionals join us. But this month, we'll close at a revenue of 10 crores profitably. So I knew you all are number people, so I thought I'll show you some numbers. Out of running a sustainable business, yet you can grow a brand, a business at the rate at which, large funded startups grow. So we have been growing over 85-90% year on year, and have these metrics where, our average order values for a startup, $700-800 is good. We have an average order value of $2,800. We have a website conversion of 4% and very low RTOs and stuff. Last quarter to this quarter, we have grown close to 100%. This month, we achieved an ARR of 110 crore. And, these numbers, the reason why I'm showing you all is that having come from a corporate background and having experienced farming and a sustainable business, I keep telling many of the young corporate professionals that it is easy to earn money, it is easy to do the numbers that you want, while parallelly running a sustainable, business or a brand. And that's very possible. As a so-called brand and a business, we are a vertically integrated organic farm. We didn't copy any brand from US or Europe and figure out how to do business. We started off farming ourselves. For 3 years, we farmed. While farming, we researched and met people who are doing organic, sustainable farming. Sadly, no agricultural college teaches you in their 4-year course about organic, sustainable farming. So we had to learn it from farmers who are not literate, but who are highly educated, because they had a sense of belonging to the soil and they were practicing regenerative agriculture. We learned from there, then started working with other farmers across my taluka and my district, and now we work with farmers in over 17 states. Developed an app for them that helps them keep traceability and also helps us guide them in the growing process. We have a manufacturing unit that is solar powered on our farms, and then handle the end-to-end process for consumers ourselves. A lot of emphasis on tech where required, so we have just implemented an ERP. These are the manufacturing facilities that started off from scratch on the farm. These are the milk facilities. And even the facilities are solar powered. So our entire milk plant is solar powered. All the packaging is biodegradable. So it's not just that we want to be a fancy organic brand and sell you organic food, while our footprint is not very conscious. So we have consciously ensured that wherever resources are used, how can we use more and more sustainable resources? All the water that we require for our farms comes from a pond of 4 crore liters, which we harvest rainwater every year. The electricity is generated on the farm by solar. Rest, if you understand farming, when the cow is there, it's a regenerative ecosystem. The cow's cow dung goes to the farm produces fodder which comes to the cow and stuff. And, now we are proud of the fact that we have a large number of products that are loved by consumers across 53 countries. And I have also ensured that traceability is there. So it's not about just me saying organic and putting a certificate, but the hand-holding that we do to farmers gets captured on an app, and that app at the front end can speak to consumers. So you get details of, exactly this jaggery that you are buying from your cart, the name of the farmer, when he planted it, the photos of planting, the 15-day visits from my team, till the harvesting and the packaging, and that is dynamic. So it's not like you'll see just an eyewash where one farmer's name is seen for the entire year. When that farmer's stock gets over, dynamically the information and the traceability details change. So our farm now has become a sort of a laboratory where our experiments are something that we opened up for many other farmers and consumers to come see and experience and learn from that. The reason why I'm saying this is that, and why is it related to conscious capitalism, is somewhere in the business world we feel not sharing data, not sharing USPs, not sharing the way I do business, which helps me earn money, it's a advantage that you have. But somewhere when you realize and when we realize that we have learned farming from many other different farmers who never kept that knowledge protected. They scheduled with us, and somewhere our experiments, our failures, the little success that we have had is something that is our duty to share it with other people. And so we opened up our farms for all kinds of people to come and see it. We now work with over 6,000-7,000 farmers across 17 states. One of our farmer recently was awarded the Padma Shri because she has been growing a very native variety of turmeric or turmeric, which has a curcumin value of 10.3%. The curcumin the turmeric that we have has a curcumin value of 3 to 4%. And no one was buying it, or there was difficulty for her to find a platform to sell it. We plugged into them. They are a matriarchal society, over 200 women farmers. Now they grow this turmeric very successfully, and for preserving that variety, the government of India gave her a Padma Shri. So this is, Tam, Sam, Som and stuff. While doing this, people feel, community needs brand ambassadors, needs celebrities, needs a lot of funding, needs a lot of money. You cannot do this without resources. People underestimate the fact that they are themselves very resourceful. And what we did is, and we've experienced is, in the last 4-5 years, we had been getting a lot of interest from consumers in the US. So we paid a trip to US, and we announced it on our social media handles that we're coming out there. Anybody wants to help us or meet us or stuff can connect with us. And our entire 42-day trip was sponsored by our consumers. So our stay, our travel, every evening we used to have a talk in their homes, and they used to invite people around, and we used to talk on clean food and sustainable farming and stuff. And we ended up meeting over 1,100 people in the 42 days that we were in the US. So this is the power of community. This is the power of making a brand conscious so that it appeals to the emotional side of people also, and not just to their logic and to the rational side. Now, like I said, what was started with me and Ajinkya and Vasant Mama and Pandu Mama and Nagesh Mama, all three are stakeholders in the company. Apart from them three, there are more than 20 stakeholders in the village. But recently, these people have joined us. We really had to give an ad for recruiting people, but they came up, and these are guys who are very young, very passionate, highly motivated, having pedigree education, but want to work for a cause that has some purpose. And this is something that we've been seeing lately. Many of the young people are not finding purpose in the work they do. There's a lot of money they are earning, but somewhere down they're becoming hollow, and the money also is not of any use if it's not satisfying doing what you're doing. So this is the team that's helping us grow. While doing all this, like I said, farming and farmers have become the reason why we keep growing, and they are our inspiration, because there are so many farmers. There are only a handful like us who have found some solutions economically, but more than 60% of India's population are farmers, and they continue to be our inspiration going forward. Again, just not doing a business that's socially responsible, but in the village that we do it, there are a lot of activities that we do for the village people out there. And these are all the other aspects of the business where, like I said, we harvest our own water, we have electric vehicles, packaging is eco-friendly, planted more than 20,000 trees on the farm, solar-powered units, and certification. So it's not like I'm a sustainable business, so somebody give me a donation, and I'll do good work. All of this runs on the power of economics of a business, and we have marked ourselves against some of the best brands in the world. We have certified our stuff against some of the best brands in the world. And when you mark the SDG goals, we fulfill 15 of the 17 SDG goals. And similarly, while I was surfing through LinkedIn, I came across this post which said that, whatever we do, ultimately, when you die, is the same amount of money that you'll require, whether you're rich or you're poor. There's no harm in being rich. And we all feel that, we are privileged that we are at a section in society where the aspects of global warming or the, the ecology stuff doesn't affect us. But I think we are all wrong somewhere. We are super connected, everybody, the person in my village to the person who sits in the highest tower in this city or in New York. And some or the other day, all this will catch up to all of us and we'll get affected. So that's our experience on it. Thank you.
So dear members, if you have any questions, please do.
Yeah, Satyajit, thanks. Thanks for that very inspiring journey of yours. One question only I have, and I had it for the last 1 month, but I thought I'll ask you in this session. Going back and becoming a farmer is the favorite pastime topic of all NRIs. Everybody thinks it's very easy. I have colleagues who worked on it, who went back, and in 1 month they gave up. They came back because it charms us. गाएंगे एक फार्म लेंगे दूर शहर से बाहर फार्म हाउस बनाएंगे आलू उगाएंगे प्याज उगाएंगे दाल रोटी खाएंगे So since you have successfully achieved this in a way, what's your advice on this aspect to all of us?
I mean, farming is difficult, especially if you have been disconnected with farming. There are many, one is the social aspect in the village. To get used to it is difficult. One is the unreliability of climate and also the infrastructure. It's not very supportive. Though if there are canals and dams, water is not assured. There's a lot of, inefficiencies in that aspect. So it's not as easy as we think. It's a good, I would say it's a good, very good profession because it not only helps you if you can earn money from it, but it helps you personally grow. It makes you physically more strong. When you're with nature and environment, you're working, out there, and it is very good for personal development. It's a very satisfying and noble profession. But I think getting sensitized to it instead of taking an impulsive decision and jumping into it, doing an internship, doing weekend farming, and then slowly doing a month of farming, and then slowly immersing and understanding all the aspects, and then doing it full time like we did, would help.
Also, I think in addition to that, the missing piece out there is the marketing. So a lot of farmers, like most of us, could go back and do farming. So we get asked this question a lot by farmers. And we tell them it's like riding a bicycle. Your one pedal has got to be on farming while one has to be on marketing. So you can sell your own produce and not be dependent on APMCs or somebody else giving you a rate. That needs to be sorted.
Hi, good afternoon. Thank you for the wonderful session. First and foremost, Annadatta Sukhi Bhava. So as farmers, Sadar Pranam to you and all farmers for doing this aspect, because we make money, but we can't eat it. You guys are making the food that we eat. So thank you very much for that. Having said that, you did mention about educating farmers. And you did mention that today in India, you do not have educational institutions that teach organic or traditional farming. What we are seeing is business-oriented farming, or in that light. Wouldn't it be a natural extension, since you talked about your integration, wouldn't it make sense for you guys to actually take up a university or work in that direction where students, because as he rightly pointed out, most of us sitting here would want to know about it because somewhere deep down, Bharat hamare andar hai and we want to do something for the nation. This would be a step in the right direction. Any thoughts on this?
Yeah, I think it is time because when we were trying to learn organic farming, there is no certificate course, there is no diploma, there is no degree. Even the BSc Agri that the agricultural colleges offer, they have, in the 4 years of syllabus, they have only 2 weeks of organic farming information or knowledge. So it's high time we know this. It's high time formal institutions come and teach this. It's an opportunity. We keep telling people that even entrepreneurs or people who want to do something in education startups can start universities or colleges that teach about sustainable farming. For us personally, there is so much of work that we have taken in our kitty because we are a vertically integrated farming setup and business, and we are self-sustainable. We do not take any government grant, no subsidy, no donations. We just got funding from Nitin Kamath from Rain Matter. But there's a lot of work that we are doing, but there's ample of scope for somebody to do that. So.
Thank you very much. Say, as rightly said by Mr. Khandelwalji, we want to go there, but as a NRI, we are not allowed to buy the agricultural land. So how to start it?
I mean, that is... and that's the only advantage we have of being in India then. Sadly.
Hello, good afternoon, Mr. Hange brothers. Quick couple of questions I had. Two things. You said the Prime Minister's mentioned you, and you also had that Man Ki Baat mentioned. But has the government of India, specifically the Minister of Agriculture, have they done anything to replicate the kind of work that you have started? And the second question, is when you started this, you were sort of, while coming from the family, also outsiders. So did you face resistance from the people around you, the established farming community, especially the mandi kind of community, which saw you as a threat?
No, we, in that aspect, answering your second part of the question, we faced a lot of resistance from home itself. And then society that stays in the village, because, getting education in a city, working in a city, and then coming back and doing farming, that's a big no-no. That social resistance is very high. We did not face so much of resistance from the mandi or anything because we didn't go and try justifying or fighting with them. We found our own ways of selling. So, and we use tech like for a website, or we went to farmers markets. And farmers markets is a place where you can put up your own table and sell to consumers directly and develop community. So we did that. I've heard stories about traders and them being a hindrance to something innovating in farming and selling, but now it's reduced because farmers also know that there's a large population of, the government also knows that there's a large population of farmers, and somebody is finding some alternative way of selling, they are pretty okay with it now. And the initial part of the question, I think government of India and the state governments also are learning from many cases like ours, a little bit here and there. They're trying to do something for farmers, but their way of doing something is by giving a subsidy or by giving some monetary help, which I feel is one of the solutions, but is not the only solution, because like for us, we do not take any subsidy or any government help. Reason is that we want to be self-reliant, and if this profession can allow me to earn the money I want without taking anybody's help, then it's sustainable truly. Otherwise, after 5 years, government changes, policy is removed, everything crashes. So they are trying to do some of the other aspect for sure.
नमस्ते जी. यस, मेरे को थोड़ा हिंदी में पूछने की इच्छा हो रही है. अपन खेती की बात कर रहे हैं इधर. तो मैं हिंदी में पूछना चाहूँगा अगर ओके है. तो जो अभी मोदी जी ये फार्म लॉ लाए थे कि जिसके अंदर कोई भी किसान अपना खेती का सामान किसी को भी बेच सकता है, मंडी में बेचने की ज़रूरी नहीं है. और वो फार्म लॉ जो लेकिन उनको रेपेल करना पड़ा क्योंकि बहुत प्रोटेस्ट था. आपके हिसाब से वो सही था या गलत लॉ था? लॉ जो लाए थे वो, जिसमें वो सबको आज़ादी देना चाहते थे फार्मर्स को कि कहीं पर भी आप अपने ज़्यादा अपने प्रोड्यूस का पैसा बना सकते, आपका क्या?
उसका क्या नतीजा होगा या होता था ये पता नहीं, लेकिन ये जरूर है कि एग्जिस्टिंग सिस्टम को ऐसे 2-4 ऑल्टरनेटिव चाहिए. मतलब वो इच्छा तो चाहिए, और वो 2-3 एक बार ये करके देखो, फेल हो गया तो दूसरा कुछ करके देखो, वो फेल हो गया, तीसरा तो जम जाएगा. एक्सपेरिमेंट्स चाहिए गवर्नमेंट की तरफ से भी. सो वो एक एक्सपेरिमेंट था. आई थिंक फार्मर शुड हैव वेलकम्ड इट, लेकिन उनको बहुत डर लगा कि एग्जिस्टिंग सिस्टम उनके मतलब वो लॉ उनके अगेंस्ट है. बट आई थिंक फार्मर शुड वेलकम डिसरप्शन, एंड दैट विल अलाउ फॉर मोर capital, more entrepreneurs and more opportunities. एंड इट्स हाई टाइम. ये स्ट्रक्चर पिछले 60-70 साल से चालू है, तो इसमें डिस्ट्रप्शन का बहुत स्कोप है.
Hello. Hello. Thank you for sharing these ideas. Hope this will be helpful for our Kisan problems. My question is that many doctors suggested that don't take the packaged food. It's contain the presumptive chemicals. It will be harmful for the body. So how you are looking, this is challenges, concentrate, or the limitation. How you can meet out that challenges?
How can I?
You meet out how you can looking these things.
So one thing is for sure that the amount of preservatives and additives in today's shelf food in the markets, if you go, is scary. And if you learn how to read the labels, you'll understand that if it is tomato ketchup, the primary ingredient is sugar. Tomatoes are only some, I think, 10-12%. Because we were doing a tomato ketchup variant and we were studying and taking all the samples and putting it in the laboratory for tests, we found out that the highest is 8-10% of tomatoes. The rest is sugar and something else. So it's scary the way food has become now. Every food contains some of the additive or preservative. The way we found a solution around it is that and make new foods. If you see traditional foods, pickling, serving that fruit. Yeah, this is a question that is put across a lot many times, that I agree, yield in organic farming is low. And will it feed the 8 billion mouths in the world? But when you look deeper and when you go to a 20,000 square feet level and view farming and agriculture and available land, you will figure out that more than 60-70% of the arable land or agricultural land in the world is not used to grow food. It's used to grow commodities that are traded globally or fuel. So your maize, canola, palm, this is something that we do not eat. Only 30% of the land is used to grow real food. By real food, your fruits, veggies, legumes, lentils, pulses, dals, rice. Only 30% of farmers grow it. Why? Because these cash crops or commodity crops give them more money. Now, if you incentivize a farmer and pay him the right price to grow more food, he can feed the growing population.
Thank you so much. Kushan, thank you so much for your wonderful session. And my question is, like, if you want to connect with you, with the option, like, we can learn from you and we can start in our hometown like that. Any option to connect with you, like how to learn about this organic farming, everything?
Yeah. So if you want to visit the farm, I can share the email ID and you can just type in Two Brothers Organic Farms and contact us. Just fill in the form or write to us, or you can write to me. I'll share my card with you, and you can come and see. Farming is something that you cannot learn outside the farm. So there's some theory, but there's a lot of practical. And your farm, your climate, your soil, your geography is different from my farm, my climate, my geography. Farming landscapes, soil landscapes change every 20-30 kilometers. So we can tell you what's worked for us. You can learn and then make your own mix and experiment on your farm and in your region. So more than invited, you can come and learn from us, from our farm in the village. It's a 2-hour drive from Pune.
Thank you, sir.
Yeah, I have a question here. What do you think are the main challenges for organic farm industry as such? What I feel is availability of organic land, of course, consumer awareness, and the pricing. These are critical factors for organic industry or organic company to have that scale. So are these the main challenges, and how do you see, how can you mitigate these challenges?
I feel the main challenge is consumers not willing to pay the right price for good food. Because economics defines what a farmer grows. 30 years, 20 years back in India, no one ate broccoli. Some chef in a 5-star hotel started making something with broccoli, and then people started eating it, and then farmers had to grow broccoli, which is a European crop, in a greenhouse in India. So you will define. If you say, I'm ready to pay the right price for good food, you will find many farmers who change practices. And whatever challenges are there, slow growing process, low yield, they'll find a solution around it. But the demand should be there. So awareness and readiness to pay the right price for good food should come in.
In terms of your pricing, I mean, organic and non-organic, how would you?
Depends product to product. If the wheat is there, it's 30-40% higher. If it's, some other pickle or something, it's around 50-60% higher. If it is, because like for a classic case, oil, and just delving a bit deeper, the ones that you get in the market sell at $200 a liter, $180 a liter. Now for making oil, example groundnuts, the highest oil yielding groundnut is a Gujarati variety, and you require 2.5 kgs of groundnuts to make 1 kg of oil. The raw material price at the mandis is $250. Your production cost, retailer margin 30%, distributor 10%, packaging, GST. People sell it at $200, $180 for a liter. The oil that we are buying, refined oils, all the major brands are selling at $180 a liter. Now my oil is $390, $400 a liter because $300 is my raw material cost. And then I do not hot press it, I cold press it. So there is some loss in that oil cake. But the oil is nutritious. Now, how can I compare with somebody who's not selling 100% oil? He's selling you, some mix, and today it is allowed, if it is more than 51%, it's allowed to be called groundnut oil. The remaining 49 can be some other cheaper variant or something else that looks like oil, tastes like oil, but is not oil. This is the condition with most of the foods that you have. Like even with ketchup, the maximum tomatoes we found in a ketchup brand was 8%. Now, how do I compete when I'm trying to make real tomato ketchup which has 85-90% tomatoes? My pricing will never match his.
Also, I just wanted to know if suppose there are two organic, competing brands, how do I know which one is, as a consumer, which one is more genuine? Because there's a lot of what we call it as greenwashing, which happens, right? I mean, they just brand it as organic or vegan or sattvic or something like that. But how do I, as a consumer, how do I identify?
This is yet evolving because the demand is growing. So there are many guys who take advantage and, use synonyms and try to confuse you. So one is self-education, educating yourself, visiting farmers markets, speaking to customers and other people who you know in an ecosystem who consume organic food. And today, social media, you can follow the brand's handle. If the brand is near your city, go and visit it. If there's a farmer's market, go and see what they're selling, how they're selling, interact. But on social media, you'll find the voice, whether there's a positive sentiment, there's a negative sentiment. So you get an idea from there to a large extent. The literature on their website. And then finally, you have to take a risk. It's about you experimenting with 2-3 brands and then arriving at one brand. So you're paying a higher cost initially for finding a good alternative which you can carry on for a long term.
Thank you. I have visited your farm in Pune.
Oh, wow.
And I have been a personal heavy beneficiary of your product because I was chronically and terminally ill. So in a way, your soil to soul has got me from, the grave to being brave kind of a story. So your Bellona ghee, thank you. Your Bellona ghee, your jaggery, your jawar, your khapli atta. So I survived on all of this for 2 years because I was on a sabbatical based in India and extremely fascinated with the concept of organic farming, which we are calling it organic, but this was the way we, like how you said, our forefathers. There's no, like our friend said, there's no structured knowledge available because I personally tried a lot to learn, to understand how it works because, when you're a first-hand beneficiary, you understand what it means, to have products which have vitality, which have life force and pran in it. Now, not talking from the education perspective because you said you're doing a few things and you're always happy to share, but it's more localized. But from a local desert perspective, we are living in a desert. I have 2 questions. First, is there ever a way of making hydroponic or aeroponic organic will there ever be a way of doing that, if you have any thoughts? And B, do you believe it is possible to extrapolate our traditional organic farming techniques in our desert farming, environment? Would that be possible ever?
So firstly, thank you for sharing your personal experience, because it's, like I said, in the community, it's feedback like this that keeps us going when you see somebody benefiting, and that's that circle that I was talking about. So thank you for that. Secondly, hydroponics and other stuff, it is very good for countries that do not have soil, like Israel or some other desert country, and they're innovating and they want to be self-reliant on food production. How organic can it get is a question mark, because I'll tell you, 30 years back, science said that a plant requires 3 macronutrients and 17 micronutrients. Okay, NPK is the macro, and then it requires 17 micronutrients. And they told farmers, this is the list of the micronutrients. You get it from the market and you administer it. And the farmer did that. 10 years later, they found out that, oh no, not 17, the plant requires 32 micronutrients. So what happened for those 10 years? Those plants were deficient, the fruit or vegetable was deficient in those micronutrients, and the consumer was not getting the correct benefit. I am saying, it is not even 32. It can be even more. So while we research and find, you can become less and less evil, you can become less and less, chemical, but I don't know when you will exactly replicate what grows in soil in an artificial medium, because the main element in soil is microorganisms. Soil is otherwise dirt, but fertile organic soil contains, 1 teaspoon contains more microorganisms than there are humans on earth. 8 billion microorganisms in a teaspoon of healthy soil. All your bacteria, fungi, nematode, protozoa, there are so many of them. And they make the soil healthy. And they make the tree get the required nutrition, and they make the fruit or the vegetable nutritious. So I feel replicating that is difficult. But if you don't have a soil, you cannot replicate, like I was telling him, somebody else's geographical success in yours. Now, in a condition like a desert, you should see 100 years back what was grown, what people ate. Where did they get their nutrition from? Was it camel milk? Was it date? Was it some other cactus? Was it, whatever? And that is sustainable, that is pest resistant, and that is nutritious for people living in that vicinity. So try growing more of that, and and that's the solution. Go back and see what was growing and grow it, like millets. India went all wheat after 1960s. It was not the case. North, south, east, west, we had different millets. There was kodo, there was natsni, there was bajra, there was jawar. That is lost, but now it's coming back into fashion of sorts. Because they require less water, they attract less pests, and amazingly, they are even more nutritious. Millets are 100% gluten-free. So somewhere our ancestors knew the right food for the soil and for our health. We have to apply and attach science to it. The science was lost. So, thank you. Thank you.
What a vibrant journey we have had today with Two Brothers Organic Farm. Their stories are like seeds planted in our minds, ready to blossom into action. From the sun kids fields to the flavors on our planets. They have shown us the magic of sustainable farming. Let's carry their vision forward and cultivate our own connection to nature. Remember, each choice we make can nurture the earth, so let's embrace organic living and support our local farmers. Thank you, Hange Brothers, for such an impactful session.
Thank you.
Please. Now I'd like to invite our past chairperson, CA Ajay Dasani and CA Leena Dasani, to come on the stage along with our current chairperson, CA Kamlesh, and vice chairperson, CA Kishore, to facilitate our speakers' TBOF.
Thank you, sir. Thank you. My pleasure.
So somebody has lost his car key. Who's this? Please take from the backstage. So before we go for the coffee break, I have two announcements to make. So there are some Apple iPod from Tele. So I request all members to drop their business card to their fishbowl to grab this prize. And another is, I think, Astor Medical Center. They have just pre-printed card for all our members. So whosoever not get, please do visit their counter. It is ready for collection. Thank you. And we are just going for 5 minutes break for coffee. And then we'll enjoy our coffee with Asneer Grover. And then we will have the raffle draw also after 5 minutes. So please be here after 5 minutes. Otherwise, you will lose the chance of winning the raffle. Thank you.